This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
I don't hear too many bullish cases for China in 2025.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Trump took steps on everything from TikTok to the southern border.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Thank you for being with us on your morning commute across the nation on YouTube, from your living room, from your office. Subscribe to Bloomberg Podcast. We're going to get right to it. Rebecca Patterson in studio right now with the Council on Foreign Relations, and we want to get right to her with the ginormous news flow that's out there. What caught your attention in the last 60 minutes, Paul?
Yeah, exactly. We have some earnings out there, Tom. We're going to have some economic, Home Depot, a little bit weaker. But, we're going to have some conference board data coming out later this morning. Alex and I will break that down. So there's some economic data this week, Tom. There's earnings this week. NVIDIA after the close tomorrow, Tom.
Tomorrow.
You need to pay attention. Okay. We'll get you a beverage, and you can listen to the conference call at 4 o'clock.
I still don't really know what they do, but we won't go there. The VIX out to 20 yesterday afternoon. We're at 19.45 now, showing the tension. The statistic that Rebecca Patterson and I look at is simple. The 10-year real yield, I'll exaggerate, is cratered. It's down at a 1.90 from 2.01 yesterday. And boy, is that a tea leaf out there. Ira Jersey of Bloomberg Intelligence with a smart note on real interest rate dynamics. Again, we welcome you as we look at economics, finance, investment, politics, international relations, tweets,
we do it all.
The rest of it. Right now, we're doing it all. Try to keep you up to speed through the show this morning on the news from Washington and beyond. Right now, from the Interactive Broker Studios, the Bloomberg Business Flash, Lisa Mateo.
And we've got futures lower, and this as President Trump outlined more measures to curb China's semiconductor industry, and that is really pushing chipmaker shares lower. For example, NVIDIA down 0.5%, comes ahead of its earnings tomorrow, like Paul said. Intel down 1%, same for ASML Holding. Meanwhile, the Financial Times reporting Huawei significantly improved its AI chip production in a boost to China's tech goals. So we'll start with NASDAQ futures, down 0.2%, 53 points. Dow futures, little change, down 7. S&P futures are little change. The 2-year yield, 4.12%, down 5 basis points. The 10-year Treasury yield slipped to the lowest in more than 2 months, right now at 4.34%, down about 6 basis points. We go to the Bloomberg Dollar Spot Index. That is little change. Bitcoin, have to point it out, below 90,000. The lowest since mid-November. Crypto-related stocks like Coinbase down 4%. Same for Marathon Digital Holdings. And for earnings, yes, Home Depot. Comparable sales, they said they're going to rise about 1% for fiscal year through January 2026, returning to growth. But that growth, a slower rate than analysts expected. Its shares are down about 2%. Finally, Keurig Dr. Pepper up 1%. Adjusted EPS beat estimates. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Rebecca Patterson here for a good conversation to start the morning off, and of course we devolve that to a dollar discussion and on from there. She's focused on crypto. We'll get to that in a moment. Her effort at the Council on Foreign Relations is noticed. I can't say enough about the new edition of Foreign Affairs magazine. You'll see it in the next couple days or so. It is just absolutely extraordinary. I've got to go to dollar here right now. Is dollar hegemony, is it threatened by all that's going on in Washington?
Longer term, yes. I think there is a threat to the dollar from some of these policies. The U.S. relies on demand for treasuries, and the idea that the treasury is going to be the biggest bond market in the world, liquid, safe, always transactional. And if you're putting tariffs on allies as well as adversaries, over time, they may want to diversify away from those assets. Now, there aren't a lot of places for them to go, but one place we've seen clearly over the last couple of years is gold. And you are seeing data showing China reducing its treasury holdings. Obviously, we know Russia did over the last several years. So the policies we're putting forward today, I think, do create some risk. Now, there's new sources of demand that we can talk about when we get to crypto. But when we think about foreign holdings of U.S. bonds, I think that is a source of risk that could push yields higher and weigh on growth.
Do you get a sense that this White House, this economic team at the White House, do they have a sense that, generally speaking, markets do not like uncertainty, whether it's uncertainty of policy, uncertainty of rhetoric. Is that something that has an audience, do you think, down there in D.C., or is it just kind of overshadowed by this is a president that wants to do what he wants to do?
President Trump has said in the last few weeks that he knows there might be some short-term pain to get to these long-term goals. I think there's probably a degree of pain reflected in the markets that would get his and his team's attention and maybe cause them to take a step back, at least temporarily. But I don't honestly know if today, looking at the sell-off we saw in the stock market last week and the continued softness we're seeing this week, registers.
I look at the follow-through of all this, and I guess I go back, like a lot of people, to real GDP. The fact is, Atlanta GDP now, a snapshot of where we are right now, is coming in with a vengeance. Mm-hmm. Do you sense a momentum to make some news here on a, what's today? Tuesday.
Sure.
On a Tuesday morning.
Bow tie Tuesday.
Do we have
Taco
bow tie
Tuesday.
Yes, I'm wearing a bow tie.
Bow tie's back.
I got the stitches out from where the damn dog bit me. Just as simple as I can, are we heading towards 2.5% or lower real GDP?
Well, here's what's so interesting, Tom. Last year GDP was much stronger than expected. We've gone into this year strong. We've seen that in the most recent earnings season, but that's all backward looking. What drives the economy is confidence and incomes. So people still have incomes. The job market's still strong outside of certain DC agencies. I don't mean to be snarky about that. But confidence is where we're seeing some question marks. The other piece that's changing is economic surprises. A lot of economists revised up their expectations immediately after the election. What we've seen over the last several weeks now is data coming in below expectations, disappointing. And that indicator coming down, now I want to be careful on causation, but it's correlating beautifully with the 10-year yield. So the market's pricing in 2 Fed cuts again. The 10-year yield is getting lower. All of that is coming hand in hand with both worries about the forward-looking economic outlook and disappointments.
Yeah, to 4 digits, Paul. Patterson's in the room, so we got to, go to 4 decimal points.
Absolutely.
1.8994 on the 10-year real yield. That's an Ian Lingen number.
Top go. These are the top stories on the Bloomberg terminal, Tom. Guess what's number 1 here? Your favorite, Bitcoin. Bitcoin slides below 90,000 as crypto sell-off gathers steam. To me, I know you're recently out with a piece in CFR on the crypto. I kind of just view Bitcoin as just a sense of risk appetite out there in the marketplace. That's it. Are we saying risk off a little bit here?
Yeah, I mean, Bitcoin correlates very well with tech stocks, which is not surprising. At the end of the day, cryptocurrencies are a form of fintech. So when you see, the Mag 7 come down, it's not shocking to me to see Bitcoin come down. If that sell-off, if NVIDIA disappoints tomorrow,
oh boy.
I think you see Bitcoin going down further. But it gets me back to our Treasury point earlier. President Trump, in one of his executive orders, is very explicitly supporting the development of digital assets and crypto, and specifically stablecoin. And I want to highlight this because to the degree stablecoins gather momentum, gather assets, they're backed by, the dollar ones are backed by treasuries and other cash-like assets. This is a source of demand for treasuries that I think Treasury Secretary Bessent is keeping a close eye on. Tether, just has something like $113 billion worth of Treasury and Treasury-like securities today.
Rebecca Patterson with us, of course, on your morning commute, and also on YouTube. Subscribe to Bloomberg Podcast, growing each and every day. Can't say enough about YouTube Premium. I'm reading the book, Mark Bertrand's book on YouTube, and YouTube Premium.
Sure.
I'm glad I did. It's sort of slick, and all that. Let's go back to J.P. Morgan and Bessemer's Trust. Is there an underlying to Bitcoin? Please inform me. Where's the underlying to support a theory of Bitcoin?
I mean, Bitcoin itself, to me anyway, remains a speculative asset. And I'm not saying that lightly. The Bank for International Settlements did a really detailed report about a year and a half ago. It's worth reading, talking about the development of crypto. And it highlights, based on a global survey, a very detailed global survey, that the bulk of owners of Bitcoin today are young men under the age of 35, retail investors, and it's a momentum trade.
Yeah, I should say worldwide, folks, and you see me say this on social, the leadership here is Raphael Auer, A-U-E-R, at the Bank of International Settlements. He has the best, whatever your belief on Bitcoin. I mean, Matt Miller should read it.
Yes,
exactly. If he can find his passcode to cash out.
Rebecca, is this administration, I mean, I think President Trump at some point, whether it's campaign or whatever, described himself as a crypto president. Is this a crypto presidency? Is this something where the next 4 years we can see the U.S. regulatory framework support crypto in this country?
100%. I think over the next 6-12 months, we will see regulatory clarity, which is going to allow more integration between crypto assets and the traditional banking system. And I think it probably will get more broad adoption. So it won't just be the young men. It will be more types of investors. And that's good for crypto in that it'll reduce volatility by having more liquidity. The risk one needs to watch is that as it gets bigger and more integrated, it becomes a source of systemic risk. If you have a hack like we did this past week in Bybit, right? $1.5 billion hack of a cold wallet, which is supposed to be safe.
Cold wallet.
Right. A cold wallet is offline.
That's Dad's wallet after the trip to Sephora.
But if that happened in the United States, we would have contagion. And that, it's not just going to be Silicon Valley Bank. It would be broader. So that's the thing one needs to watch out for. You can have regulation to give them the ability to grow and innovate. You still have to have a few consumer guardrails there.
Our listeners and viewers know where I am on this, and I think Ms. Patterson knows where I am on this. So let's cut to the chase. First thing I did this morning is from peak to where we are now, BitDog is down 20%. That's not a currency. We've got all sorts of IRA, ETF, Eric Balchunas, BlackRock, this, that, and the other doing it. What should we say to those people if we pop down another 10%? I mean, horrific bear markets in the equity market are negative 35%. If we get that in Bitcoin and we're now letting everybody have Bitcoin, what's going to be the outcome?
Well, again, my concern, I think to the degree digital assets encourage more financial innovation in the United States, that's great, right? Our financial system is creative and broad and deep, and that helps the U.S. economy. What we need to be mindful of is that the pool of people today, not in the future, but today, who are trading Bitcoin and these currencies aren't necessarily aware of how to save for retirement in a safe, methodical way. This is not an easy path to retirement riches. And if they lose their money, they have less ability to buy a home, to invest for the longer term. So understanding the volatility of what they're buying, that's, I hope that these crypto companies do a lot more education going forward to help these people invest in these assets wisely. Right now, I don't see a lot of evidence of that.
Paul, out on YouTube live chat. Thank you. The live chat can be very smart. Subscribe to Bloomberg Podcasts. This guy, one word, tulips.
One of the things
Thank you for that.
Is the regulatory environment. Like in the last administration, the Biden administration, Gary Gensler, I expected him, and I think a lot of people did, that A, he understood crypto, and B, he was going to take a forceful hand in kind of pushing the regulatory framework forward, which most participants are asking for.
Yes.
Yet he did not really. What do we know about this administration, the Trump administration?
Well, in the last administration, there was some debate, fight, whatever word you want to use, between the different regulatory agencies on who would be the lead on digital assets. I think in this administration, we're likely to see a lighter touch, probably led by the CFTC rather than the SEC. I think we'll get some legislation from Congress through probably in the next few months, which will also create a clear path. And these companies need it. They deserve it, right? They need to know the rules of the road, and the banks and other asset managers need to know the rules of the road. So I do think this administration is going to be incredibly helpful on that front. Again, my hope and my ask, if I could be there in the White House today, would be, please don't forget some consumer protection, some consumer guardrails.
Do you have in your head a price of Bitcoin south where everybody starts wringing their hands? I mean, we're at 89,000. Is it 80? Is it 50? I mean, I have no idea.
So my worst case scenario, a realistic worst case scenario, would be that we get some disappointment out of one of the big tech companies, NVIDIA, whoever it is, it doesn't matter. And we get more of a concerted sell-off. Maybe in response to tariffs, China put some holds on U.S. tech companies acting in China, those sorts of maneuvers. You get a bigger sell-off in tech, which is not impossible given valuations, given ownership, and that contagion pulls down cryptocurrencies in a meaningful way because these investors own crypto and they own meme stocks and they own a lot of tech. And so they get hit on both fronts. That could get some momentum and pull down the broader market. I don't know if anyone buys that dip because they just need to be covering their losses at that point.
Well, again, and the retailization of this is where I have my radar up. Rebecca, thank you so much. Rebecca Patterson, way too early. Thank you so much for coming in.
My pleasure.
With the Council on Foreign Relations and all of her work on Wall Street, particular comments on the dollar. I'll try to get out the Bank of International Settlement essays from Raphael Auer and company. They're absolutely brilliant, very sobering. And as Ms. Patterson mentioned, the depth of their research. Futures are -3. Paul, it seems so much more gloomy than that.
Yeah, exactly. This is a market. I mean, we'll wait for the NVIDIA after the close tomorrow, Tom, but other than that, the market's hanging in there. We're at or near all-time highs. Yields coming down here. We got the 10-year Treasury off 7 basis points, 4.32%. I'm going to start taking a look at the mortgage market here. How about that?
Well, you know, we'll have to see. I'll do a drawdown of the SPX to see how grim it is. I don't think it's that grim. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Confusion reigns among government workers on whether to respond to a threatening email from Elon Musk. Let's get the latest from Bloomberg's John Tucker.
The deadline was just before midnight. Elon Musk demanded that federal employees explain their recent accomplishments or risk getting fired. Now Musk says federal workers will be given a second opportunity to respond. But the federal agency that sent the email says it's up to agency leadership, not Musk, what happens to those who ignore the message. Everett Kelly is the national president of the American Federation of Government Employees. He takes a pretty dim view of the tactics used by Musk.
They want to confuse the workforce. They want to put fear in the minds of the workforce that they'll just quit.
At least 3 agencies, including the Justice Department, the State Department, and the Department of Defense, instructed their employees not to respond to Musk's directive. I'm John Tucker, Bloomberg Radio.
President Donald Trump says he's hopeful Russia's war in Ukraine is nearing an end game as he met with French President Emmanuel Macron on the 3rd anniversary of the Russian invasion.
A lot of good things toward peace are happening, moving it, I think, pretty quickly.
However, Macron cautioned that it is crucial that any potential agreement with Moscow does not amount to surrender for Ukraine. Israel wants to extend the Gaza ceasefire to free as many hostages as possible while preparing for a return to war if necessary. The pause in hostilities with Hamas concludes on Sunday. Talks for a second phase stalled, and a U.S.-backed extension is being considered. Pope Francis, hospitalized in critical condition, was well enough to meet with the Vatican Secretary of State to approve new decrees for saints and call for a formal meeting to set the dates for their canonization. Francis, who is 88, has been hospitalized with double pneumonia, and doctors are warning his prognosis is guarded. Global news 24 hours a day, and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Great to have Rebecca Patterson. And let's talk about the distinctions here between the Bank of America and J.P. Morgan. Mr. Moynihan coming up with David Rubenstein, and I think there's not nearly enough discussion, as you mentioned earlier, this ginormous bank, Bank of America.
Yeah.
A lot of other banks get a lot more visibility.
Yeah, you think about the Bank of America, and again, they're obviously a monster commercial bank, retail bank. And then with the great financial crisis acquisition of Merill Lynch, they became a global investment bank here. I mean, it's $340 billion of market cap here. And you think about it, they're in every town USA. They are a global investment bank. They see everybody. They talk to everybody from the small business owner to the giant global corporation. Mr. Moynihan has got a great feel for how's the economy out there? How's the consumer out there? Are people taking down debt capital to build businesses and all that kind of stuff. So it's a great conversation.
The distinction, Paul, is J.P. Morgan was sort of J.P. Morgan, Mr. Harrison, over to Mr. Diamond, where Bank of America was a legitimate roll-up.
Yep.
Do you agree with me on that?
Absolutely. And again, just kind of a great corporate bank for small, mid-sized, and large businesses. And then with this acquisition of Merill Lynch and the great financial crisis, they became this global investment bank. I think it's taken them since then to kind of figure out what it means to be a global investment bank, a global financial institutions a la J.P. Morgan. And I think under Brian Moynihan, they've really evolved and grown into this role. And, so it's going to be a great conversation. The stock's kind of flat year to date. It's up about 30% over the past 12 months. But they're in, it seems like a good position. When you think about it, J.P. Morgan, Goldman Sachs, Morgan Stanley, that's it.
Yeah,
that's how you play it.
David Rubenstein with Brian Moynihan. We'll do that in the next hour, extended conversation. Red and green on the screen. Dow actually positive, like to 2 decimal points. We're on YouTube. Subscribe to Bloomberg Podcasts.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by IBKR. Will the U.S. CPI exceed 2.4% in March 2025? You can trade your prediction with IBKR forecast trader. The yes, recently at 60%. Buy yes or no and earn $1 if you're right. Go to IBKR.com/forecast. All right, we've got futures mixes as investors remain on edge. Geopolitics front and center. We also have President Trump saying tariffs on Canada and Mexico set to begin next week. Let's start with NASDAQ futures. Down 0.1%, 36 points. S&P futures little change, down about 1. Dow futures little change, up about 30. The 2-year yield 4.10%. That's down 7 basis points. The yield on the 10-year 4.32%, and that's down 8 basis points. To commodities, we have spot gold at $2,937 an ounce. Brent crude $74 a barrel. WTI crude $70 a barrel. The Bloomberg Dollar Spot Index down about 0.1%. More economic data. Today we have a read on consumer confidence. Tomorrow we go to new home sales. Then later in the week it's U.S. GDP, also U.S. PCE, inflation, income, and spending. Ending it out. More earnings this morning. Planet Fitness. Fourth quarter earnings beat. Targets another big revenue jump in 2025. The gym opened new clubs. It also raises prices, but shares this morning, they're down about 1%. Shares of Hims and Hers Health, they're still taking a hit. They're down 22%. This is after it said yesterday it was going to stop offering at that active ingredient in weight loss drugs Wegovy and Ozempic after the first quarter. And finally, shares of Zoom Video Communications down 4%. Revenue guidance disappointed. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
Thanks so much, Lisa. Greatly appreciated. Mr. Macron with Mr. Trump yesterday. He likes his 2 scoops of ice cream.
Oh, is that right?
I wonder if Mr. Macron, it's on Ile Saint Louis, just south of Notre Dame, the island south of Notre Dame.
Okay.
And I hope I'm butchering the name here as best as I can. Bertillon ice cream, Bertillon.
Okay.
The lines go out the door, Paul, like it's Nathan's Famous. It's unbelievable. It's the best. I guess it's the best ice cream in Europe. I don't know, but maybe that's what Mr. Macron should have brought him. And all this has to do with the global litmus paper, the global system.
Yep.
that's where it's very good to talk to Jane Foley with Rabobank's really unique perspective on commercial transaction. Jane, can you take the parity watch off on euro? Are things so upset now, so confusing, as Greg Vallier says this morning in his research note, that the idea of getting euro beneath parity and the reality is a new stable or stronger euro, can that be?
You know what? I wouldn't take parity off the table quite yet, and a couple of reasons for that. And the first is that it's possible that the market's become a bit too complacent on the notion that Trump won't roll out significant tariffs. So we said, last night that the progress is being made on Canada and Mexico tariffs. And of course, look at the rhetoric on the EU. It does seem very likely that tariffs are going in the direction of the EU too. So that would still have an inflationary impact. That would still perhaps, affect the market's expectations for Fed policy too. So whilst the market has been pricing in a bit more Fed easing this week on the growth outlook, well, those inflation fears could come back. But the other reason is that look at the performance of the euro. Yes, the dollar has weakened, but this month, in the month to date, the euro has been the second worst performer. The euro has really struggled to gain traction, and that is, of course, because of all of the structural and now the defense issues facing the euro, facing the eurozone.
Moments ago, George Saravelis at Deutsche Bank maintains, exactly as we heard from Ms. Foley, a weaker euro stance. He notes the German election, highly controversial in nature. Having recommended a short euro through the entirety of last year, we are now turning neutral. But it's got a little negative weight. So these are the shifts we're seeing from people like Jane Foley at Rabobank.
Exactly right. Jane, we were just looking at the yen here. We've got the yen below 150 here. What do you make of that?
I think that's a long time coming, and I think the yen has got further gains to be made. Now, some of this is, of course, the fact that the dollar is weaker. The dollar, the weakest performing D10 currency in the year to date, but the yen is right there at the top of the table. It is the best performer, and of course, this is related to the market reassessing the likelihood of Bank of Japan interest rate hikes. Some of the rhetoric that we've had from Bank of Japan officials this year has been supportive of those expectations, as has been the economic data. Some of that's come in better than expected too. Inflation, GDP, earnings numbers as well. But below all of that economic data is really a significant restructuring potentially in the Japanese economy. And as these data continue to come out stronger, it really does begin to, increase the market's confidence that these structural changes in the Japanese economy, i.e., the end of deflation, the end of that 30 years really of disinflation, deflation, and the beginning of a revitalized Japanese economy. And if that is the case, that's pretty exciting for investors.
Yeah, it's been a long time since we've had a growing Japanese economy. So talk to us about the U.S. dollar here and the weakness. What's driving this here?
Well, first of all, partly we saw a huge amount of strength really from, right at the end of September into the beginning of January. The dollar index was up 10%. So you could say it's inevitable perhaps that, that the market sat back and said, we need to take a bit of profits on that. But now, the market's become complacent on the tariff announcements. The market instead has begun to turn its attention to growth in the US. And I think the PMI data at the end of last week was really quite important, because most of the official data that we're getting is backward looking. It's looking at a period before Trump took office. The PMIs, of course, are forward looking, and the drag down really in that composite index, the concerns really of those businesses about the uncertainties created by Trump's policies and the drag that could have on the economy. I think that has begun to make the market, a little less confident. So I think what we need to see over the next, 1 to 3 months is the real direction of travel of the U.S. economy now that Trump has taken office. And I think the market needs some reassurance on that.
Jane Foley, you have so much work on hedging at Rabobank. Where's your speculation now? Where's the cross rate that allows big figure potential? Is it on the Pacific Rim? Is it something like zloty forint? I'm only saying that to impress Jane. But Jane, where's the cross rate that can be an opportunity in this news flow we're having?
Well, what I would say is because a lot of the uncertainty is connected with the US and Trump's policies, etc. Right. It's probably best to take out the dollar. So, for instance, you could look at euro yen. The yen seems to be strengthening. The euro is at more or less the bottom of the table once you remove the dollar. So I think euro yen is quite a nice one to look at, and it's liquid. Now you can look at the Swedish krona, and that's performed so well recently. A real change. Well, against everything apart from perhaps the yen. The Swedish krona, has been pretty strong. The market's thinking, the Riksbank is right at the end perhaps of its rate cutting cycle. Growth is turning around, but of course there isn't that much liquidity in the Swedish krona. So that would only suit certain types of investors. But euro yen, I think that's probably quite an exciting one this year for the majority of people.
Jane, I've got to ask this always, Paul, for the divine Sarah Eisen over at the Death Star.
Yep.
Jane Foley, is there value in Naki Stocky?
I think both of those currencies look to perform quite well. Yes, of course there is, but given the lack of liquidity, I think that is a special trade, really, not really for everybody. But I would, if you want better liquidity, I think you'll probably be better off with euro stocky. I think that's probably a better one.
This is great, Jane Foley. Thank you so much. Great sport, and just always smart there. This is a Scandinavian currencies. And the way I met Sarah Eisen was through FX. She was just a funnel. She's 23, 24 years old, whatever. And she's reading everything she can. Michael Rosenberg, Mundell, all of it on foreign exchange. And she fell in love with Naki Stocky. And as you heard the pro there, Jane Foley, talk about Euro Stocky. This is the interesting relationship between Norway and Sweden. I mean, that's how inside baseball you get on
that's
this.
big. Okay. I didn't know that was a thing.
Oh, yeah, Naki Stocky, and there's a couple other doozies out there you can play off the loony. And Barry says, what's the antipodes? Mental block right now. Aussie Kiwi.
Okay, sure.
Aussie Kiwi. Yep. Of course, Lisa's looking up Aussie Kiwi right now.
Getting the
Jane Foley with Rabobank there. Yep. And again, Paul, this is the litmus paper of the system. I got to admit, I'm not counting the rows now, but I got 15 rows of currency pairs lined up to give me the pulse off the Bloomberg launchpad.
I was trying to get you to euro parity for your next trip to Paris or Rome, but I don't think we're going to get there. We're sitting at 1.05.
Yeah, but I think it's sort of like your last sojourn. I mean, basically, it's still sold out.
Yep.
I mean, I'm scrambling for like maybe reservations in Scotland, and it's like still.
We're heading over to Italy in September, and that's the Jubilee year, which is for the Catholics is big, which is not good timing. But my boys at CIA are going to take care of it. CIE.
Very good. Okay, though the Jubilee is there, and of course, with the illness of the Pope, and the good news, Michael Barr telling us that Pope Francis in some form of recovery this afternoon in Rome. For the Jubilee, they had a deacon ceremony that he could not take part of, and we'll continue with that. We're efforting people here on the story, the moment for Pope Francis. Red and green on the screen, of VIX 19.28 from New York. Bloomberg's surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures mix, and this is after a mostly down day on Wall Street. We'll start with NASDAQ futures down about 0.1%, 35 points. S&P futures, little change, down about a point. Dow futures up about 0.1%, up 44 points. The two-year yield, 4.11%, down 6 basis points. The yield on the 10-year, 4.32%. That's down 8 basis points. The Bloomberg Dollar Spot Index is little changed. And we go to Bitcoin, down 5% at just under 90,000. Few companies making news this morning. Sources say SpaceX was looking to use its Starlink satellite internet terminals to help upgrade the FAA's national airspace system. The problem is that it's raising concerns about conflicts of interest, also about the future of that $2 billion contract that was awarded to Verizon back in 2023. And Tesla's European sales, well, they plunged 45% year on year in January to fewer than 10,000, and that's as rival car makers actually saw a surge in EV demand. Tesla shares are up about 0.3%. And Macy's, it signed the new 10-year rights deal with NBC Universal for the Macy's Thanksgiving Day Parade, its 4th of July fireworks, and also 2 more holiday celebrations. That is your Bloomberg Business Flash. Paul and Tom.
Lisa Mateo, thanks so much. Greatly appreciated this morning. Paul Sweeney and Tom Keene with a surveillance audible. Got to do it right now. Mark Lohr, Bucknell Bison.
Yes.
He and A-Rod and somebody else, they're out at Bucknell. Mark Lohr, excuse me. Thank you, Ari, for that. Joining us now, Bucknell Bison and Shanali Bassick here. So A-Rod's at mid-court and sinks a basket for $10,000 for a student.
Imagine if A-Rod was really Michael Jordan at the end of the day and picked the wrong sport?
Yeah, I guess so. But tell us about Bucknell and the ability to develop Shanali Bassick and Mr. Laurie as well.
It is interesting. Every time I look around in finance, there are kind of people everywhere. And I actually did not know, embarrassingly, that Mark Lohr was a Bison until you mentioned it. I knew who he was, but I did not know that we shared
was at Walmart,
the school.
Walmart e-commerce, and did diapers.com and that.
Yep.
And leveraged it into this ginormous career. How are those guys doing now? I mean, as a general statement, how's Entrepreneur that, you've got your Bloomberg Invest coming up next week downtown. Sold out, folks. Only Lisa can go. Paul will be there. Alex will be there.
Yes,
I
broadcasting.
won't. Thank you. That world, how are they doing with the politics of the moment?
That's true. Alex Rodriguez will be there. He will be interviewing Melody Hobson that evening on the first night of Invest. But one thing I'm looking at is, to your point on entrepreneurship, on all the exuberance that was expected at the beginning of this year. As you know, some of that is fading. Why? Because we have the VIX at 19. Today we're going to speak to Joe Baratta over at Blackstone. And, one of the big questions, he has one of the biggest IPOs of the year ready to go. Is going to be able to get out there with this much uncertainty under the surface?
It's interesting. Bank of America, they're out with that wonderful research where they talk to their clients. What are you guys doing? What are you guys doing? Where are you putting money? Trading clients are on the sidelines amid Trump uncertainty. So I guess, we started this with animal spirits, deregulation, lower taxes, pro-business policies. Now some of that kind of getting maybe a little bit of overshadowed by some of this uncertainty about trade policy.
Trade policy and also growth. Tom, did you wake up this morning and do the same thing I did, where you looked at the 10-year yield and you said, what is going on?
I looked at the 10-year real yield, which is way down, really down, showing those Fed rate cuts.
And the conversation is really being shown to, okay, well, you wanted a lower 10-year, but if it's because growth is slowing so much, then it could be a really dangerous thing.
The last time you were on, we talked about Manhattan and all the effervescence that's out there. Paul, the world's come to an end. The SPX drawdown is 2.7% from the record high. My moving average study would be 4.8% down. Are we just addicted to growth, Shanali? Is everybody within the Bassick world completely focused that double digit is the new norm, which we obviously know is just a fiction?
Since I was last here with you, I've been thinking a lot about the Gilded Age you've been talking about and where people are getting really rich. And, even with the stock market surge that you saw last year and the year before that, private markets is really where people have been hiding. But even there, growth is worrisome. And a lot of people are very worried about the decisions they're underwriting today and whether they'll turn quickly on them.
And Shanali, your beat is global Wall Street, the big investment firms, the private equity, the private credit. We kind of came into this year thinking, all right, we're finally going to get a lot of deal flow here, M&A, IPOs, things like that. What have we seen so far?
One thing I have been doing a bit of a tour at the big banks in anticipation of this conference. I'm hearing that a lot of deals are being put on hold because of tariff uncertainties. And the reason is pretty simple. You don't know how much to pay for something if you don't know the amount of money they're going to bring in at the end of the year or into next year or the year after that.
So, I mean, again, is it global Wall Street is a little bit sitting on the sidelines here at this point?
Not completely. I mean, to your point on deals, yes. We have seen some IPO activity. You might remember SailPoint was taken public, a week, 2 weeks ago now. And if you look at the trading, and I've been watching it somewhat closely because the choppiness of it shows you that not everything is going to go to market easily. When you think about the IPO market, that Blackstone IPO I was talking about is Medline. This is a company that could be $50 billion in an IPO. It's not small. It was one of the biggest LBOs of all time 3 years ago when it was acquired.
One final question. When I was a kid, chemistry was the gospel at Bucknell. It was world famous. Did you ever take chemistry
Did
at
you
Bucknell?
know I started pre-med? I did almost the entire curriculum.
Did you survive organic chemistry?
I survived organic chemistry, and then I lied to my parents about doing journalism until I got into Northwestern. And so I'm a wildcat too, Tom.
Oh my goodness. That explains a lot.
This explains a lot. It's Shonali Bassick in Inorganic. She was drinking the methylethyl ketone. Thank you so much. Shonali, thank you so much for joining us. Oh, the things you learn on this show.
I mean it's just, not only does she get this master's degree in the journalism thing, which all the smart kids do at Northwestern, then she gets an MBA at NYU.
She's a striver.
Why would you? I don't know. Too much
You and I are having a beverage of our choice. And she's out getting another degree. Shonali, go away.
Yeah, go.
You make us inferior. Bloomberg Invest next week with our news in New York City. Here's Michael Barr.
Thank you very much, Tom, Paul, Lisa. There is some confusion surrounding the email sent by Elon Musk's Department of Government Efficiency. Musk saying overnight that employees will get another chance to respond to his email asking them to list their recent accomplishments. Now, the original deadline to respond passed several hours ago, but Musk now saying failure to respond a second time will result in termination. President Trump.
What they're doing is they're trying to find out who's working for the government. Are we paying other people that aren't working?
Meanwhile, President Trump says he is hopeful Russia's war with Ukraine is nearing an endgame as he met with French President Emmanuel Macron on the third anniversary of the Russian invasion. However, Macron cautioned that it is crucial that any potential agreement with Moscow does not amount to surrender for Ukraine.
There is a big change because there is a new U.S. administration. So this is a new context. So there is good reason for President Trump to re-engage with President Putin.
In a dramatic shift in transatlantic relations, the U.S. has split with its European allies by refusing to blame Russia for its invasion of Ukraine in votes on 3 UN resolutions seeking to end the war. In the UN General Assembly, the U.S. joined Russia in voting against a Europe-backed Ukrainian resolution that calls out Moscow's aggression. Finally, we've lost Grammy-winning singer Roberta Flack.
Killing me softly with his song, killing me softly with his
Flack, who gave us Killing Me Softly with his song, The First Time I Ever Saw Your Face, and other hits, died Monday. Roberta Flack was 88. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
We were stunned as a nation when those songs came out. They were absolutely original at the time. And then I believe it was Clint Eastwood took them over to the movies with Play Misty For Me. And it was complete. Michael Barr, do you agree with me? It was liturgy, a complete subset of all the magic that was happening in that era.
Now back in Detroit, because I used to listen to R&B, we heard some of those songs, but it didn't rise up until the Clint Eastwood movie Play Misty For Me. And then all of a sudden you're hearing all these songs. I'm like, oh my goodness.
Go on YouTube and check that out.
He devoted over 5 minutes of the movie to the entire song. I remember sitting in the theater going, well, this is different. And it just fit. It just, it was absolutely brilliant to make those choices. Michael Barr, thank you so much for that. Red and green on the screen right now. The VIX, a little better tape than 20 minutes ago. Let me get this in if I can. The Prime Minister of the United Kingdom is speaking right now, and these are important NATO statements. Starmer says U.S. defense budget to reach 2.5% of GDP within 2 years. So there's one of the headlines there of a new attitude in Europe. From New York City, Paul Sweeney and Tom Keene, Bloomberg Surveillance.
Now a look at the front pages. What's making news around the world? Your daily roundup of today's headlines on Bloomberg Surveillance with Tom Keene, Paul Sweeney, and Lisa Mateo.
Good morning, everyone. Paul Sweeney and Tom Keene. The front page was Lisa Mateo, the Lisa Mateo Hour. Let's get right to it. What do you have, Lisa?
Well, yesterday we were talking about Apple's plans, right, for more jobs, U.S. investment. But experts are saying that they're just sugarcoating their investments. This was a Wall Street Journal analysis that said that Apple's new job promises, they're just slightly ahead of their recent 4-year pace. They also said that the spending pledge is roughly on track with its recent investments. So the Journal spoke with these experts, and they said that a lot of companies who do this, they cater to the administration's needs, right? They just sugarcoat, repurpose existing investments. They said about 80% of those announcements in spending that was already in the works. So they're saying it's nothing new. Yeah, they're saying it's nothing new.
Yeah, Mark Gurman from Bloomberg News, he was in on Bloomberg Intelligence yesterday, and he has a great piece out on the Bloomberg Terminal yesterday, kind of laying out all the numbers. So it's good stuff. I mean, they're spending money in the U.S. It's all good. Apple can claim a victory. President Trump can claim a victory. But the reality is it wasn't that much incremental.
For our listeners and viewers worldwide, do the three of us have news fatigue right now?
We're just getting started.
I'm afraid to look at the cell phone. It's like every minute of the day.
You get another alert.
What's the next red sticky or red banner I'm going to see? Next.
Yep. It is. This one, you probably got a sticky on this. DoorDash paying about $17 million to drivers in New York State. Here's the reason why. So the drivers are saying that the delivery service cheated them out of the tip money because they applied it to their base salary. So basically, the money would go into this fund. About 60,000 or so drivers are eligible, so they could get up to about $14,000 each. But what I didn't realize is that the delivery worker, they were guaranteed, let's say, $10, right? You make a delivery, and then the customer tips the worker $3. But DoorDash would only pay the worker $7, and they would keep it because you couldn't see the breakdown.
See, that's
in your
when
pay.
I click on it. If you're going to tip somebody for an Uber or whatever like that, you don't know where that's going. As opposed to putting a couple bucks in a jar, sitting in front of a bartender or something.
This is a huge deal
because they don't show the break. They're not transparent about it.
This is a huge.
And this goes to the whole tipping environment out there. It's changed in the last 10 years. So here's the rule of thumb I use. If I'm standing, I don't tip. If I sit, I'll tip. So you go up to a counter and you buy something, blah, 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 and they turn the screen around for you to tip, $0.
Do you feel the pressure, though? Do you feel that?
Not anymore. I used to, but now I've got my new strategy, and I feel very comfortable with my strategy.
So if you're in God's basement at that club down in Seagirt, and you're having a scallop standing up, you don't tip?
Correct. Exactly right. Exactly right. Although I've tipped really well at the Parker House.
What's it called? God's basement?
God's basement at the Parker House. Over the last 45 years, I've tipped very well at the Parker House.
They know when he works.
They know Mr. Sweeney. How are you, sir?
Mr. Sweeney, good to see you again. You young thing, you.
Last one. This was in the New York Times. Lawyers for Paramount and President Trump have actually agreed to appoint a mediator in that $20 billion lawsuit that he had against CBS. So mediator could actually help them reach a settlement. Whether they will, it's uncertain, but it's complicating a few things like the merger, Paramount's merger with Skydance is complicating that. Media lawyers are saying that this could open up the door to more lawsuits against other news outlets. It could also lead to shareholder lawsuits, especially if he wins a big judgment. And they're saying that Paramount's also concerned that it could lead to legal liabilities because it may not be covered by corporate insurance policies on top of it. So there's a lot behind it that goes on with that.
Exactly. Good luck with that. And again, they're trying to get that deal done with ByteDance.
Is Paramount sold? I mean,
it hasn't closed.
No. It hasn't closed yet.
And it gives wonderful leverage to President Trump and his legal team because one of the issues kind of slowing down the closing of this deal is this litigation out there. So it could be a good time for President Trump and his team.
Okay.
Yeah.
Egg prices, just real quickly.
Yes.
How long does it take for like more chickens to make more chickens so we have more eggs? How long does that whole thing work?
Crazy. I mean, it's crazy. Yeah, no, it's funny because the data shows that their flock of egg-laying hens, it dropped to a 9-year low in January. So yeah, they're not laying the eggs. They're not laying the eggs. They don't have enough chickens to lay the eggs.
Last night, for the first time, I ordered groceries, and there were no eggs.
None?
None.
Oh, see?
Must have been 15 different choices. Out of stock. Lisa Mateo, thank you so much. Newspapers, I greatly appreciate that today. We did Santana yesterday, got a huge response for that. That made me think of Michelle Branch, which makes me think of John Shanks, a name you don't know, a giant of modern arrangement.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What's the immediate take of a tariff war?
For the longest time, technology has been the driver of this market.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Trump declared a national emergency at the U.S. border with Mexico.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Lisa Mateo, Michael Barr, Stephanie Roth walks in the studio. The market goes up. That's the way we roll here. Stephanie will be with us with Wolf Research here in a moment. And then an important conversation with Angela Stent. Her book, Putin's World, of course. Angela Stent on the upset of Eastern Europe right now. Let's get to it quickly here this morning. Bloomberg Surveillance brought to you by IBKR. Will the year-over-year change in U.S. PPI exceed 3% this February of 2025 at IBKR Forecast Trader? The yes was recently at 39%. What's your take? Trade your prediction at ibkr.com/forecast. Paul, what are you looking at on the Bloomberg Launchpad this morning?
A little bit of green on the screen, but I'm looking at the yields, Tom. We've got the 10-year Treasury down 7 basis points, 4.32%. I can't remember the last time we saw that. So that gets your attention here.
Somebody just published 8 rate cuts this year.
There you go. Our next guest just changed it to no rate cuts. So we're going to talk about that coming up.
It's topsy-turvy here. Yep. Oil, Brent crude eases, West Texas eases in, but still 70.24 and not stable under $70. Mike McClone out with a blistering note this morning.
Really?
From
Miami
oil.
Beach. All right.
He's like, you got up early.
Yeah. Good for him.
I say Bitcoin, I don't know what to do with, down $5,000. 89,000. Is this a focus of the Alex Steele Hour?
Oh, we'll jump all over this. We might even ask Matt Miller to step in and give us some thoughts there.
We'll have to see. From the Interactive Broker Studios, the Bloomberg Business Flash, Lisa Mateo.
And we've got futures. Well, we have green on the screen right now. This is as U.S. sketches out tougher versions of its chip curbs against China. What that's doing, though, it's pushing chip maker shares lower. So we have Intel down about 0.5%, ASML holding down 0.5%. Checking with NVIDIA, they were down nearly 1%. Right now, their shares just about little change. All comes ahead of their earnings tomorrow. We'll start with NASDAQ futures. Little change, up about 11. Dow futures up 72 points. S&P futures up about 6 points. The 2-year yield's 4.12%, down 5 basis points, and the yield on the 10-year 4.32%, down 7 basis points. 10-year Treasury yield slipped to the lowest in more than 10 months. We have the yield on the 10-year 4.32%, down 7 basis points. The 2-year yield 4.12%, down 5 basis points. The Bloomberg Dollar Spot Index down about 0.1%. Like you said, Bitcoin falling below 90,000, and that's bringing crypto-related stocks like Coinbase, Marathon Digital Holdings down about 4%. As far as earnings, Home Depot comparable sales rise about 1% for the fiscal year through January 2026, but the growth at a slower rate than analysts expected. Its shares were down nearly 2%. Now they're down about 0.2%. And finally, Keurig Dr. Pepper up 4%. Fourth quarter sales climbed higher, and they sold more beverages at higher prices. That's what it was.
Our buddies down in Texas, that's the go-to.
Critty, it's all she drinks.
Yep.
I mean, Critty
Exactly.
captured Mike one day in the food court and had a tantrum.
I know.
Full Critty Gupta mental breakdown because we didn't have Dr. Pepper and they had to get it in for Critty Gupta. Lisa, thanks so much. The assembled are assembling in Washington. They're at Bar Faro, we call that, the Ritz-Carlton.
Yep.
When John wants to buy me a beverage of my choice in Washington, he takes me to the Quadrant Bar and Lounge at the Ritz-Carlton.
Solid.
That's
Faro territory, I think.
Yeah, Faro territory. We're going to have a breakfast moment. David Rubenstein and Brian Moynihan with us right now. You know, economics will come up. We need a legit economic brief right now with Stephanie Roth joining us from Wolf Research. Did Paul say no rate cuts this year?
That's correct.
What are we getting wrong right now as I see the 10-year real yield 1.91%? I mean, it's moving away from your call, right?
Yeah, it is. And I think that's one reason why we're kind of doubling down on this. This is something that we've believed for quite some time in the sense that it's going to be a tough environment for the Fed to cut. I get that the narrative right now is this softer data. Some of this has to do with the federal layoffs, which have started to play out pretty significantly, but also some of the seasonality in the data. And I think this is what could easily reverse in the next couple of prints, in which case that could change the narrative pretty materially. And I'm talking about the retail sales print, which sparked a lot of this negativity about the economy. We had a very similar type of print January of last year, and it entirely reversed in the months after that.
So what do you think the Fed is looking at here? Is it inflation? Is it the labor market? What do you think is going to really influence them in 2025?
I think if you're talking about the potential to get them to cut, it's going to be the labor market.
Okay.
If we start to see some more material softness, if we see numbers in the 125-ish range, I think that's what would get their attention in a big way. Our base case right now is that, yes, the federal layoffs could push the unemployment rate up by a couple of basis points in the next couple of months. But then after that, the immigration cuts are going to have more significant downward pressure. So these things are moving in opposite directions. Federal job cuts, higher unemployment rate, but more significant immigration cuts, downward unemployment rate.
This is really important, folks. For those of you on radio, you have to look over at Stephanie Roth. You can see it on YouTube in real time. Subscribe at Bloomberg Podcast. She's explaining job dynamics and labor dynamics, and she looks like she's landing an airplane at JFK. She's moving her arms around. Explain the dynamic. Labor is, people in the media make labor economics seem simple. It's not, because you got like immigration coming in, buttressed up against other things. What's the number one thing within that toxic mix you're looking at right now?
So the number one thing is going to be the discretionary visas that are going to be rolling off in the next couple of months, specifically really the next 2 years, with a peak impact in Q3 of this year. This is somewhere to the tune of potentially 3 million people who will roll off the labor force. And that compares to what? Potentially 100,000 of federal layoffs?
What kind of people are they? Are they PhDs from Carnegie Mellon? Are they?
This is not H-1B visas. This is largely people who are coming in from Cuba, Haiti, Nicaragua, Venezuela, Mexico, specifically during the Biden administration.
That's going to go down.
That's going to go down. A lot of it's blue collar type workers. They've been added in the construction, food business, retail, so lower end workers, and that's where you'll probably start to see a notable tightening in the economy for this year.
And that will have I guess my question is, will that have a negative effect upon growth of the U.S. economy?
Yeah, so there's two dynamics here, right? You'll have a slower growth trajectory because there's fewer people here spending, but then at the same time, there's fewer people here to work, which then could have inflationary pressures. So what we saw over the past 2 years is the more important factor was that these people rebalanced the labor market, and this is now going in reverse.
Do we have the people to replace these immigrants that have helped us for 6, 7, 8 years?
No, we don't. And that's the challenge that the Fed is likely to deal with here, is that there's not the people to replace them, in which case they're going to again be struggling to find workers and this happened kind of seamlessly. People didn't really notice what was going on for a couple of months. All of a sudden, it just was a lot easier to be able to hire people. And a lot of this was due to the surge in immigration that we saw in the past couple of years.
Do the economists in this administration, I assume they understand this economic dynamic, but I guess that's not at the forefront. It's more the political call here versus the economic call.
Sure, and like you could argue, you know, Trump feels very strongly about reversing the policies that the humanitarian parole programs, which is what brought in a lot of these people to the tune of several million. He feels very strongly about reversing them. He did that on January 20th. So this is a sort of a full stop, and it already went into place, in which case this amounts to almost 2 million visas that are going to be rolled off, and this has already happened.
One question here. I see Atlanta GDP coming in from the nirvana that it was to a more reasonable number. Is that efficacious for you? Do you get value out of the snapshot that Atlanta GDP takes?
It depends at what point in the quarter we're talking about. And Atlanta Fed itself notes that early in the quarter, their error rates are a lot higher because they have a lot less data to go on.
But we're not early in the quarter now, are we?
So I think that's right. I think we're going to see a GDP print that potentially has a one handle in the first quarter, similar to last year. Last Q1 also had a one handle. And then the rest of the quarters were roughly 3%. And I think we might see something similar, not 3%, but elevated growth in the the last 3 quarters of the year compared to the first.
Please don't be a stranger. Stephanie Roth, thank you. Just brilliant with Wolf Research. Thrilled to have her with us. Joining us now here with markets lifting a little bit is without question our conversation of the day. There are mysteries out there, including mysteries of what is going on in the Kremlin. I have forever and ever been humbled by me getting the Yeltsin call so wrong. Angela Stent is definitive on this, senior fellow at Brookings and at Georgetown as well. And her book, Putin's World, was my book of the year a long 3 years ago. Angela Stent, with great respect for your decades of work, I saw the headline, I believe, in the Washington Post that said basically the United States sides with Russia within the United Nations. I'm making a generalization there, folks. What did you think when you saw that? What do you observe to your work, Marshall Goldman's work, all the way back through the decades to see a headline, America sides with Russia?
Well, Tom, this was truly shocking. I mean, who did we veto the resolution condemning Russia with? Our good friends, North Korea, Russia, Belarus, Syria, the Central African Republic, Nicaragua. I won't go on. Even China and Iran abstained from that vote. So Ronald Reagan would be turning in his grave, as would many others. It's really quite remarkable. And if you think of what the U.S. has stood for, you know, for the past 80 years since the end of World War II, through the Cold War, through the post-Soviet era, it's quite remarkable that we veto a resolution that condemns the Russian invasion of Ukraine.
What should Marco Rubio do?
I think he's in a very difficult position. We know what he has said before he became Secretary of State about Russia, but right now all of the officials in the Trump administration are repeating the same line. It's complicated. Russia was provoked. So, you know, if he wants to stay in his job, he presumably has to repeat those lines too.
Angela, you mentioned 80 years of precedent, U.S. policy vis-a-vis the former Soviet Union and Russia. Should we be surprised that this has changed literally on a dime and we've had no real, I guess, opposition from anywhere in the U.S. government to this policy? Should we be surprised that it changed so quickly?
I think we should be surprised by the rapidity. I mean, we knew from President Trump's first term that he admires Putin, that he wanted to do a deal with Russia. But to have this happen so quickly within a month of him coming to power and with everyone, the top officials in his administration, repeating this line, we should be. Now, there are Republicans in Congress who have pushed back against this, but there are not that many of them. And I think, you know, we have to wait and see whether there's going to be more opposition to this line. The Kremlin is delighted. I was just reading the remarks of the press secretary, Dmitry Peskov. You know, finally, the United States has seen sense and has understood, you know, what the real situation is.
I think of At Dawn We Slept, the failure of our intelligence of Pearl Harbor in 1941. Angela Stent, we were sobered by the failure of our intelligence with the collapse of the Soviet Union. Would you suggest that we have any clue what's going on at the Kremlin or within Mr. Putin's orbit?
I mean, I think we have some clue. We know that they are absolutely delighted about what's happened recently. They're even talking about that publicly. We have a pretty good idea that they're not interested in a peace settlement in Ukraine, but they're certainly interested in improved ties to the U.S. Let's restore relations. Let's have a summit. Let's have President Trump visit for Victory Day, May 9th, 80 years since the end of World War II, visit. So that we know. Do we know what goes on in the very inner circles? Of course not. But we can gauge some things by what they've said.
This is why we love having Dr. Stent on, folks. Could you imagine the President of the United States in Moscow for those celebrations of Russian might in May?
Yep.
I've never once framed that,
never had that
as
vision in my
Angela
head.
Stent only can do.
Angela, what do you...
I can. Yep, I can.
Angela, what do you think the response will be, should be from rest of the world? I'll just leave it there, rest of the world, as it relates to this changing U.S. position vis-a-vis Russia.
Well, we've just had President Macron here. We have Prime Minister Starmer coming tomorrow. The Europeans are really trying to push back. President Macron did a good job, a valiant job of trying to persuade President Trump that, we have to work together and that, the U.S. isn't getting stiffed by Ukraine. He in fact corrected Trump about loans versus money given to Ukraine. I mean, the Europeans are trying their best, and they've come to realize that they're going to be alone in this. If they want to support Ukraine going forward, they're going to have to do it without the United States. Now, for those countries that abstained, which is a large number yesterday in the General Assembly, they're just going to shrug and say, this is a European conflict and it really doesn't touch us that much. But certainly the Europeans, and I would say our Asian allies, are very concerned.
To extend, Angela Stent, the list of U.S. and Russia is, Israel, Haiti, Hungary, Palau, Marshall Islands, Burkina Faso, African nations I can't pronounce, Belarus, North Korea, Syria, Mali, and Nicaragua. What is the ramification of our diplomacy? To Paul's good question moments ago, how do we do Kissinger diplomacy around the world, given that beauty list?
Well, I think that the Trump administration is still believing, for instance, that if we have this rapprochement with Russia, Russia will decide to distance itself from China and will reverse course. I think that's highly unlikely, but I think that's one thing that's going on here. And I think it's also the U.S. trying to show to those countries that supported us, and I guess those who abstained, that, we're not necessarily taking sides in this. We recognize that Russia is a great power, and we're going to try and do something different. Yeah.
My fondest hope is the Secretary of State will read Angela Stent's Putin's World. Dr. Stent, thank you so much for your commitment to Bloomberg surveillance. She is with the Brookings Institution. Red and green on the screen, the VIX 19.28. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Elon Musk says federal workers will get a second chance to respond to an email detailing what they did last week or risk being fired. But that might not clear up the confusion around the directive. More from Bloomberg's Bill Ferries.
You still have some government agencies pushing back on Elon Musk and the email that came from the Office of Personnel Management saying they have to list out what they accomplished last week. Elon Musk again saying that federal employees need to do this. They'll get a second chance or they will be terminated. You have other departments, Defense, State, Homeland Security, pushing back and telling their staff not to respond. That's not settled, and I think that's confusion that's going to continue for several days.
Bloomberg's Bill Ferries. The U.S. and Russia voted against a European-backed resolution in the UN General Assembly that calls out Moscow's full-scale invasion of Ukraine 3 years ago. The U.S. and Russia later aligned in the Security Council to approve a U.S. resolution calling for a swift end to the conflict without assigning blame, a stark reversal from policy under President Joe Biden. Former tech entrepreneur Vivek Ramaswamy says he is running for governor of Ohio in 2026. At an event in Cincinnati, Ramaswamy said he is more optimistic than ever about the future of the nation.
I know Donald Trump's going to be successful in the next 2 years, but that means a range of programs from education to healthcare are moving from Washington, D.C. back to the states and to the people where they belong.
Last year, Ramaswamy ran for the Republican presidential nomination, coming in fourth in the Iowa caucuses before dropping out of the race. Hospitalized in critical condition, Pope Francis was well enough to meet with the Vatican Secretary of State today to approve new decrees for possible saints and make some major governing decisions. Francis, who is 88, is hospitalized with double pneumonia, and doctors are warning his prognosis is guarded. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
You know, Paul, Michael, like the Mookster out in the Dodgers. I can never say his full name because it's too much agony for a Red Sox fan. I mean, Michael Barr's got the goatee going like Mookie Betts.
I know.
I mean, you know, it's like
he could play for the Yankees.
He's styling, yeah.
Yeah.
Yankees update. I knew there had to be an angle. Here it is, team reporting, Yahoo Sports, Ian Castleberry. Devin Williams asked for a private meeting with young Steinbrenner and basically said, you want to re-sign me? Change the damn policy. And the statistics here, does this get your attention? A 1.83 ERA, 14.3 strikeouts per 9 innings and 68 saves. Good, you know, Gillette, don't short Gillette, I guess is what it means. That's the reason. Devin Williams just gave him basically gave him an ultimatum.
I was kind of like the policy because it was kind of unique to the Yankees, kind of fun, fit in with their kind of their whole thing. And, you know, we're the Yankees, we do it the Yankee way, but you change with the times.
But where you and I are in agreement, and I love that they don't have their names on the back of their home jerseys.
Of course, yeah.
That's like, you know, did the Tigers do that? I don't even know.
No, Tigers, we still have the names.
You have the names of the home jerseys.
Yeah.
You know,
What's important is the name on the front of the jersey. It's not
well,
on the
thank
back.
you. That was very Roger Angel-like.
And if you go
Bob
into the
Costas
Yankee
just
store at
teared
the
up.
stadium and buy a jersey or Judge jersey, don't get it with a name on the back.
Get it without the name, and if you get an away jersey, okay. Away jersey I get. You know, it's cool. Yeah. But I think Paul and I are on the same page on this. Lisa, you taking notes over there?
I have the one with the name on the back.
They are cheaper, I have to admit. I think they are cheaper. There you go.
There we are, your baseball lore for today. I'm reading Roger Angel just to keep up with the season beginning here. We'll have team Grapefruit and Cactus League coverage led by Michael Barr here in a couple days. It's Bloomberg's surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment. Offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. All right, we've got little movement in futures this morning. This is as investors remain on edge. Geopolitics in the spotlight. We'll start with NASDAQ futures. Little change at up 10 points. Dow futures up 81 points. S&P futures up 5. The 2-year yield, 4.12%. Down 5 basis points. The yield on the 10-year, 4.33%, and that's down 6 basis points. To commodities, we have COMEX gold, $2,942 an ounce. Brent crude, $74 a barrel. WTI crude, $70 a barrel. The Bloomberg Dollar Spot Index is little changed. More economic data. Today, we have a read on consumer confidence. Tomorrow, we will move on to new home sales. Then later in the week, U.S. GDP and U.S. PCE, inflation, income, and spending. All right, we have shares of Hims and Hers still taking a hit, off about 21%. It said yesterday it's going to stop offering that active ingredient in weight loss drugs like Wegovy and Ozempic. That'll happen after the first quarter. Then Cleveland Cliffs, their shares down 4%. It widened its loss, logged lower sales in the last quarter. And finally, shares of Krispy Kreme, not so sweet, off about 13%. Sales and profit forecast, they fell short and fourth quarter results missed. I know, they don't want the sweet treats anymore, I guess. I don't know. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. That is your Bloomberg Business Flash.
I can tell you from careful reporting, there isn't a Krispy Kreme donut shop within 5 miles of the headquarters of the Citizens Bank, Providence, Rhode Island. It's the most, it's just on from Brown University. It's Paul, it's gluten-free.
Okay.
The pizza's gluten-free.
I have no idea what gluten is.
Yeah, who knows what we're there. This is a joy. Head of Commercial Banking at Citizens, Don McCree joins us here. And this is, of course, before Mr. Moynihan and Mr. Rubenstein go at it at the Ritz in Washington. Is, well, you have so much experience, your JP Morgan experience, what you're doing at Citizens. How do the smaller banks compete with the, to use a fancy economic phrase, the monopsony, the power of the big banks? What's the Citizen strategy to participate?
So we, in my business, in our commercial and investment banking business, we cater primarily to middle market companies, which seem to like our franchise in terms of our ability to service them around any of their needs, whether it be, issuing bonds or
modern chemical bank. Is that where we're heading?
That's where I started.
Yeah,
we're recreating Chemical Bank.
Could you just see him as an intern there with button-down collar, suspenders, and belt?
At the Chase Manhattan Bank, you could not get up from your desk and walk the hallways without your sport coat on.
This is out of UVM. I mean, with Ted Castle and all, they were playing some hockey up at UVM.
And soccer.
National champions.
National champions. You get catamounts. I knew that.
Very good.
Don, when you talk to us about your customer, what's a typical corporate customer of Citizens Bank, and what are they doing today?
I would think about it on 2 axes. One is it's a middle market customer, anywhere up to $1.5 billion to $2 billion of sales, largely family owned.
Okay.
There's a lot of family transition going on, so parents wanting to get out of the business, kids not wanting to be in the business, and that's a big part of what we're doing. We're transitioning companies to private equity. And that's the other big piece of our business. We have a massive private equity business and a private credit business. That's where the future is, I think, in terms of company ownership in the country. And we do everything from working capital finance to facility finance to transition finance. And a big part of the strategy of Citizens right now is also around our private bank. And that's a new leg of the company, which has been quite successful, probably going for about 2 years right now, but growing very, very quickly and turned profitability in the fourth quarter of last year.
Interesting. All right, so talk to us about private credit and how you either compete against private credit as a source of capital or maybe work with private credit.
There's a lot of kind of commentary on private credit right now. We look at it as kind of threefold. One is they're a customer. So we actually bank them.
Okay.
We do a lot of facilities to private credit complexes. It's quite safe lending. It's investment grade equivalent. So we like it, and it's a way to deploy capital and support those businesses. We view them as a customer or as a outlet for our syndicated finance business. So we sell them loans in our leverage finance business, and we are increasingly banking the principals of the private credit companies, particularly if they're part of a private equity complex, through our private bank. So we kind of surround them. We don't really view them as a threat. Largely where they play to date has been the more leveraged end of the equation. So they trade leverage levels for price. we wouldn't make those loans anyway. So if we can place those loans with them, that's a really accretive thing for both our clients and the private credit complex.
Some will say the death of E.F. Hutton, maybe of A.G. Edwards St. Louis, was the inability to get out front on technology investment. How does Citizens compete, server to server, computer to computer, with the major banks?
You know, we don't have to compete directly. We have to keep up. So we are a fast follower in a lot of what we do. We think we're well ahead of most of our regional competitors. We're about to finish a complete transformation of our tech stack, which we're going into the cloud. We'll be the first regional bank that's 100% in the cloud, which will give us a lot of flexibility to innovate and create new capabilities going forward. And then we just pick our spots. We don't have to be everything to everybody. And we partner. We've got some fantastic tech partnerships with providers, so we don't have to build it all in our own infrastructure. If we find that I'm meeting with one of them this afternoon, and we actually utilize other people's investments to basically benefit the bank.
In your loan portfolio, what's your real estate exposure, office real estate exposure, commercial real estate exposure, and is that a concern for you? Because I think a lot of investors look to the regional banks to maybe have some challenges.
Yeah, we've got, we started our journey with about $4.2 billion of commercial office real estate, which is the only part of the real estate portfolio I'm frankly actually a little bit worried about. We're down to a little under 3 right now. We've taken a few write-offs, nothing significant. We've gotten repaid and refinanced out of a lot of it, but we've got about $3 billion of continued exposure. It's a full workout portfolio. We're working through it. We've got tons of reserves put up against it. We've got tons of loss absorption capacity. We think it's probably a 2-year journey before we get to the end of the commercial real estate challenge, but it's well within hand.
Okay, this is important, though, then. It's going to be a reset, and we hear consistently the banks feel they're well reserved and not going to get hammered like in previous train wrecks. Who takes the loss? The answer is the people that own the real estate.
I think the equity gets wiped out.
The equity gets wiped out.
Yeah,
and
in a lot of these situations. If you're a bank, you're coming in at 50 or 60% LTV to start with. So even if you take a 50% loss, you're writing off 20% of it. The equity is coming in at 40, 45%, and they may take 100% loss.
We just had on Angela Stent, and she mentioned President Reagan. Reagan codified the value of small business so the Republican Party could win 1 million years ago. There's an article just this week that now small business is becoming less dominant versus big businesses and maybe the monopoly roll-up of America. Take Pizza Marvin's in Providence. I mean, just as one example. Can banks service legitimate small business, or are they running it off their charge card?
No. I mean, and again, they can run it off our charge card. So we serve tons of small business, and we're actually growing our small business.
Give us a vignette of that. We don't in this world we don't do enough of that.
So if you think about what is and I think about this well beyond traditional banking. We're a service provider to small business. So we try to provide them information to run their business in a more intelligent way. We try to provide them insight into things like ESG if they're worried about that. We try to provide them insight into things like cyber if they're worried about that. So we finance them, we advise them, and we importantly, we stick with them during good times and bad times. And increasingly what a small business is going to need is a suite of payment services and payment information services. And you probably have heard of embedded finance and a lot of the things that are trends in the banking industry, providing, we just signed up with a company where we're embedding a travel services company onto our credit card, which will offer to small business because they don't have a travel department. And so providing incremental services to help them run their businesses in a more efficient way is really the trend of the future.
I mean, this is vital, Paul, within Providence, Rhode Island, because you need to, if you got an ocean spritz at Pizza Marvin's, I mean, you gotta tag team it with a double cheese pizza.
Sure.
I mean, that's what you do at Pizza Marvin. That's how it rolls.
Yep, exactly. You're a graduate at the University of Vermont. You're on the board of trustees. Give us a little bit on what's happening up in Burlington, Vermont.
So, Burlington is going through it's a great college town. It's going through a little bit of a rough patch in terms of a little bit of a spike in crime and the like. And so the city's dealing with it. They've got a new mayor up there, and so we're hopeful that that's going to right itself. It's still a fantastic place, and it's still a fantastic town, and one of the greatest places on earth, and a vibrant downtown. Yeah. But UVM is doing fantastically well. We've got record applications, record enrollment. We've just become an R1 research institution, which is very exciting for us. So it's on the rise.
Two of my siblings, UVM.
Really?
Yeah.
Very good.
Yeah, we were all in Burlington for a while.
Very good. Don McCree, thank you so much.
Yep.
Head of Commercial Banking at Citizens. We're waiting here for a conversation with David Rubenstein in Washington. We're going to move forward on that. Don McCree driving the market higher right now. Futures up 7. The VIX 19.07. It's a much better tape than it was 2-3 hours ago with Home Depot with stability or a lift. What we're doing is we're timing this off the Ritz-Carlton. I think they're a number of minutes away. Let me say this about all our economic coverage in Bloomberg Surveillance. Brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio, small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about their consultative support and technology. I think an open question, given the absolute unreal, surreal news flow. Damien Sassauer joins us now with 3 Bloombergs on his desk, 12 screens. What, pray tell, is your best litmus paper right now within the EM broader financial system?
There's nothing else to talk about except U.S. Treasury yields here, Tom. I mean, it's been inflation expectations that have been driving the aggressive part of the curve in terms of trading this year, but that has flipped on its head in the last, I would say, 3 trading days. I mean, look at growth expectations. Look at the 10-year real yield. I know your audience loves you quoting that, but at 189, 190, I mean, that's a 19-bit move in 3 trading days.
Yeah.
That is massive. You cannot ignore what's going on.
Is there a convexity there? Is it full faith and credit, so acceleration doesn't matter? Or is there actually a convexity factor?
Of course there's convexity there, Tom, but I mean, the reality is this, growth expectations mean something again. They matter again. And we've been in an environment that where we've been kind of bludgeoned by inflation expectations rising on the back of tariff risks and whatever. But now as you look further out along the curve, the bond market is just not happy with Trump's plans, the Trump administration, in terms of how it's going to generate growth in the U.S. And so that's what you're witnessing here. And I think, what you're also kind of seeing is quant tightening coming to an end, and you're seeing T-bill issuance basically taking up a greater portion over coupon issuance on a forward-looking basis, and that's going to push duration and term premium into the market, in my opinion, and that means that you're going to see a steepening of the yield curve, and we are seeing that right now in the U.S., and it's kind of filtering over into the broader EM complex.
Okay, summarize just for me, the simpleton out there.
Okay,
why are yields coming down?
So it's been growth expectations lately, but it was and basically more so than inflation expectations, right? Your expectation of inflation has been going up, but the growth coming down has far outweighed that in recent trading sessions, and that's why you're seeing nominal yields, the 10-year yield at 4.34 today, Paul. And so, that's kind of what we're looking at. If you have to kind of shift and look at what that means for foreigners like emerging markets, you got to look at the dollar impact, right? And the dollar, which has basically been, the leader, in terms of a funding currency this year for emerging markets. Remember the yen-funded carry trades?
Yes.
That's all in the past, right? The yen is the dominant performer this year, up 10%. So if you're looking to fund, you're looking at other alternatives, and it's been a bearish dollar trade here. So, if you're a currency practitioner and with the volatility around the dollar, it just means that carry's not been, even though it's the primary driver of currency performance, it's just not linear. And so people are looking at growth, they're looking at value, they're looking at trend, other sort of factors that might drive currency performance in the dollar, on a forward basis.
To generalize, you mentioned up 10%, a 10, 12 big figure move, stronger Japanese yen. Can that digest worldwide comfortably, smoothly? Are there linear and smooth curves or not?
Well, no, not because, just look at the Asian bloc. Look at Asian central banks like New Zealand, Australia, and just overnight, South Korea, where we basically seen them all cut rates in the face of the Fed on hold for longer, right? So, those are the low yielders too. If you just look at, inflation in Asia, it's off the grid due to Chinese deflation. So, the fact that those currencies are lagging the broader universe makes sense. But, look at Colombia. What people are not focused on, Tom, I just have to highlight it. The idiosyncratic factors that are going on in Central Africa, that are going on in Colombia most recently, and how that's driving my complex, but we don't have time to talk about that now.
Damien, thank you so much for joining us today. We go to the Ritz-Carlton in Washington, the Economic Club of the District of Columbia of Washington, D.C. David Rubenstein in conversation with a gentleman from the Bank of America, Brian Moynihan.
Question. Well, first off, the Bank of America has 70 million consumer customers and millions of small businesses all over the country, all over the world. And so we bank everybody. But the real question was about overregulation, frankly. And so as you look at what's happened is because the interpretations of AML, anti-money laundering, BSA, Bank Secrecy Act, KYC, know your customer, know your customer's customer. There's a lot of burden upon the banking system to both report suspicious activity reports and do a lot of analysis. And we have to close accounts, and we can't tell people why we did it. And often we're told by authorities to close accounts. That creates confusion. Another area that comes up in this discussion is in the crypto area where the regulator said you can't bank crypto operating companies, employees of crypto companies, et cetera. We are allowed to do, we bank everybody, but the operating company, they said that's a high-risk activity, ask us for authority, and guess what? You would have never gotten the authority. So that came up as an issue. So at the end of the day, it's about getting these regulations right. And I think it opens a dialogue about how to get these regulations correct. In the end of the day, we're open for everybody. We serve millions and millions of Americans, trillions of transactions a year, and we'll continue to do so.
Okay, so when this administration was elected, there was a lot of, I would say, jubilation in the streets of the banking world. People thought that the banking regulation had been too tough under President Biden. Some people thought that regulation would be more amenable to banks. Has that turned out to be the case yet, or is it still too early to know? And is the banking community happy with the direction that the current administration is going, or you just don't know yet?
Well, so you have to sort of step back and say, the regulation of banking has always been true since our charter, our oldest part of a bank was from 1784. So we've been regulated from that day forward. If you think about the great financial crisis and Dodd-Frank and a lot of capital rules and liquidity rules and all that stuff came in, there was a reason for the world writ large to be really not happy with banks. And non-banks that became banks, Goldman Sachs, Morgan Stanley, Merrill, et cetera. So you could understand that. When you go fast forward through the 15 years hence, plus you go through the pandemic and the banking system stands up and stabilizes the economy. You go through the regional banking crisis, the banking system steps up and stabilizes it, and they keep adding capital and liquidity. You're sort of saying, wait a second. We are a source of strength. And by the way, the American banking industry is really a source of strength. So the pendulum kept just swinging, even though the reason why it had swung had stopped. And so our industry was saying, wait a second. Why are we have 20% more capital than we did during the pandemic? The risk is the same. It's just by mathematical creep of calculations. Why are you saying we're going to limit your fees charged for a certain activity or deem an activity a loan when it wasn't a loan? And with hundreds of years of history saying an overdraft is not a loan, somebody just says, I want to make it a loan. And so this idea of the regulators sort of imposing new rules and regulations that Congress did not intend, actually, was kind of an interesting question.
Right. So many people, when they talk about the Federal Reserve, they wonder whether the Fed's going to increase interest rates or decrease interest rates. But in the banking community, you're often worried about the stress tests.
Right.
And do you think the Fed has pushed stress tests to too tough a limit on banks, or are you okay with the current stress tests?
So the stress tests are publicly available. I think the first one was 2010 and then picked up in earnest 11 or 12. And so every year you can see this report card on the banking industry's health. And every year the banking industry has great health. But the issue we got in the banking industry ended up suing the Fed was behind the scenes the rules kept changing in the test. So if you think of the last 4 or 5 years, you had volatility in capital requirements that were, went from 50 to 75 basis points up and down a year with basically a test that said 10% unemployment, 50% downturn in the equity markets, 30% drop in housing, 30 or 40% drop in commercial real estate, high yield spreads blown out by 1,000, 2,000 basis points, whatever it was. You look at all it, the same test produces different results. It didn't make sense. So behind the scenes, the transparency wasn't there, and that's what we ended up suing them on. So the stress tests are a very good thing. Frankly, it gives us state of health for 31 banks, which cover most of the industry. The way the United States run them is far superior. We do stress tests every quarter, multiple scenarios, and our trading book is stressed every day. So if you think about it, it's a good thing. It's just that behind the scenes, what was happening is that dials were being turned on us and the numbers were becoming irrational to the market. And we have investors and we have to raise capital and have capital available for the industry.
So there's a vice chairman of the Federal Reserve who's in charge of regulating the banks and so forth. That person has given up that position recently. And was that something the banking community was happy with, that he stepped aside, or you didn't really care whether he stepped aside or not?
Well, at the end of the day, I think he had a year left on his term, and the new administration president would appoint someone for that position. Look, at the end of the day, as when people always ask me, do you have different approaches for different administrations? And you say, well, in the long term, we've been around since Washington was president. So if we geared ourselves up for this president, not that president, we'd have to change 45 times or whatever it is. And if you think even in the foreign soil, think how many different prime ministers there's been in England, or so even in my tenure as CEO. So at the end of the day, you run the company the right way. And what we're trying to say is get us to a rational regulatory structure that and have it stick to the ribs. If you keep swinging like this, our clients can't depend on us when they need us.
So before the Great Recession, there were a number of large banks in the United States and Europe and Asia. And now it seems as if post the Great Recession and post-COVID, the United States is dominating the global banking world. What happened to the European banks? They're not really competing with you and JP Morgan and Wells Fargo as much as they used to. What happened? What are the American banks doing that enabled them to become so dominant in the banking world?
The American banking system is probably a story as much of American capitalism being successful, because in the days, the banks in the country represent the size, scale, and scope and the vibrancy of that economy. So what happened from pre-financial crisis to now is, at that time, you and I have been sitting here talking about how China's economy was going to be bigger than the United States by now. The European economy was as big and was going to outgrow the United States under the enthusiasm for the EU framework. And guess what? We're 1.5, 1.75 times the size of the economy back then. Europe's like 1.1 or whatever it is. So we've outgrown them. That's part of the vibrancy in, frankly, dealing with the financial crisis, recapitalizing industries, failing a bunch of industry participants, bringing people into the tent, the right regulations, and then going forward. And so what's happened is Europe is not kind of crawled out economically. Therefore, their banking system has been hamstrung at the same time.
Now, you've been the CEO for 15 years, and the bank has recovered from a lot of problems it had when you took over. You've had a great career. Suppose the President of the United States said next year, I need a new chairman of the Federal Reserve Board, and you've been running Bank of America. Why don't you come in and be chairman of the Federal Reserve Board? Your response would be?
I think I'd say talk to David Rubenstein.
No, I don't think so. I'm sorry. So you're
now, our company, look, in the end of the day, I get up every morning and I've got teammates out here in the audience, and this team is unbelievable. And if you see what we do for a customer, and my email's in the public domain, and customers send me when we're doing great things for them, and when we're not doing great things for them, come directly to me. Nobody reads them but me. And so if you see what we can do for a company, for an individual, you see the enthusiasm for a young kid who's opened an account, enthusiasm for the 4,000 or 5,000 kids we hire between 18 and 22 that come into our company every year, the communities that we support, that just is a great job, and I love doing it as long as I'm healthy, as long as I have the energy, and as long as the team and the board support me, I'm good.
So recently, another banker you probably heard of, Jamie Dimon, and he testified on Capitol Hill that maybe the regulators and Congress should get together and say, let's just start afresh and take a look at all the banking regulations from a fresh perspective, building from scratch. Do you have a comment on that? Is that a good idea? Or?
Well, I think the spaghetti chart of overlap is the question. So just take the Consumer Bureau. In 2010, with Dodd-Frank, 10 or 11, they set up the Consumer Bureau. The theory was that all the consumer regulatory activity would move to a new agency. Guess what? We still have the OCC regulates consumer activity, we still have the Fed regulates consumer activity, still have the FTC will hit consumer activity on occasion, and you have the Consumer Bureau, and if you have the FDIC as a regulator, you have the FDIC. So none of that happened, so you end up with another added regulator. Much like after 9/11, HHS came in and was supposed to swoop everything in, it didn't quite happen that way. So I think you could start with a fresh sheet of paper, recognizing that in the National Banking Act in the 1800s, or whether the Federal Reserve Act, or the FDIC Act in the 30s, the world has changed a lot since then. And so the idea of national regulatory consolidation, even on a dynamic country like the United States, is probably more appropriate today than it was when you had 10, 15,000 banks all distributed all over. And Tom Barkin's coming from the Richmond Fed. Tom is terrific. But there was a day when everything went on in Richmond, and the Richmond Fed catchment basin was only there. That day is way past.
You're regulated by the Federal Reserve, the FDIC, the Comptroller of Currency, and anybody else?
The Consumer Bureau, the SEC, the CFTC. Then, put it this way, there's 100 plus regulators in our building every day.
So do you spend a lot of time with the regulators, or you try to avoid that?
I'd like to spend time when they're telling us we're doing good stuff. But no, we all spend a lot of time, and I have a great chief risk officer, and Jeff Greener, who organizes that for the company. All my senior executives spend time with them. And look, the day-to-day regulators are trying to help us be better, and we understand that. We are on the road to perfection as a company. And as Vince Lombardi said, you strive for perfection, excellence we found. That's what we're trying to do. If they've got ideas, we're all ears. Simplifying the organization will allow, frankly, cost to be taken out from the regulatory side, and we pay fees to support it. And it wouldn't be the worst idea.
Now, when interest rates go up, the theory is that banks can charge more for loans, and therefore they're more profitable. And banks have been very profitable in recent years. When interest rates go down, is that a concern to banks because you have less profitability, or you really don't care?
Well, the toughest time to be a bank with $1 trillion, $2 trillion deposits is when interest rates are zero, because we can't charge people to store their money. We're not like a self-storage unit or something like that. So at the end of the day, you have a floor on interest rates. And so when interest rates came down, you started squeezing margins. So the loan rates came down, but the deposit rates have a zero floor. When rates move up, that changes. And so the zero interest checking accounts, all that stuff become worth more, and loan rates go up. So as long as the rate structure is more normal, and anybody that under the age of 40 has never seen a real rate structure except for like right now. And probably even a little older than that now. And so the idea of a 3% Fed fund rate isn't high rates, it's the usual rate, in fact, on the lower side. A 4.5% 10-year, the usual rate. And so in that environment, banks will make money. But at the end of the day, the net interest margin, which is the difference between what we lend at and what we pay for funds, tends to run 250 basis points. And that benefit goes back to the depositor side and to the debt holder side, and as rates go up and then ups and downs, it's just when it hits that floor, that margin got down to 150 or something like that.
As interest rates come down, though, it's not going to affect your profitability?
Not a lot, because you have...
all right, so you don't want Jay Powell's job, it sounds like, but suppose he called you and said, should I increase interest rates, decrease interest rates, or hold them the same? What would your advice be?
Our team right now is basically says there'll be no further rate cuts through their forecast period, which is this year and next year. And they were one of the first people to pull that off the table. And they did because they said inflation is coming down, but is a bigger fight. And at the end of the day, there's the dual mandate, employment, inflation. Employment, they're in great shape on. Inflation, it's been coming down, it's working its way down. It takes multiple years to squeeze inflation out. They started in 22, and so think of 26 is actually a normal period to squeeze it out. And there's a drag on the economy today. And so you're seeing economic growth from 3% in the last couple of quarters to 2%. We have it moving down to 2%. So he shouldn't, our expectation is they won't cut rates. I think we have
for the whole rest of the year.
Yeah, for the rest of the year and into next year, and frankly, until inflation gets down.
And, okay. So let me ask you, the business that my firm has been in is private equity, but now private equity firms have become private credit firms as well. And private credit firms, they lend money, but they're not regulated quite the way you are. Right. So is that a source of concern that we can lend money and we're not as highly regulated as you are, and you're lending money, but you're highly regulated, or you don't care about that?
I think I care about your firm, look, at the end of the day, the private capital has grown because they can do something we can't along a couple dimensions. One is they can finance companies that may have more leverage. And we are basically stopped out at 6 times leverage. And that used to be a rule, then it was taken back, then it was a guidance, and then it was like, wait till we examine you. So, and we do go above it for certain credits and stuff like that. So that's one thing. The second thing is, the ability to bring the whole capital structure, debt, equity, the whole, mezzanine, the whole 9 yards. That's hard for a bank because we don't engage in the equity business. But on top of that, we have $1 trillion of commercial loan commitments, $500 million plus of drawn loans. We don't fear any competitor, and we work with those companies, including yours, to generate assets for them. But it's just a different style. I think the world should be concerned to make sure that those enterprises making loans to $1 billion operating company have the ability to work with them in times of stress. That's going to be an interesting question. We haven't gone through a stress period with this practice out there.
I think J.P. Morgan, maybe other banks, maybe you have gone out and raised private credit funds that you can then lend out without the normal constraints that you have with the money you have from depositors. Is that something you've done, or you think it's a good idea?
We've created some capacity. In the end of the day, the credit we're willing to do is important as much as we can. So we have, we're dying for more loans. We have $2 trillion of deposits and $1 trillion of loans. We're trying to do all the loans we think have good credit quality, and so we don't feel it as a constraint.
Right, so let's talk about your background. I am an only child.
Yep.
You have how many siblings?
7.
7. So, growing up with 8 people in a family, wasn't that crowded at times, or?
I'm trying to think. I didn't have. I was set up to get my own bedroom for the first time in my life, and my younger brother decided he wanted to move in the bedroom because he was scared to sleep alone. So I think, I'm trying to think, probably when I was in college, it was the first time I ever had a bedroom to myself. So yes, it was crowded.
So what did your father do to support 8 children? Was he in private equity or something important like that?
He was a research chemist for DuPont. Okay. And so he spent his whole life on plastics. So the graduate, plastics young man, my dad was that.
Okay.
That's what he did.
You grew up in Ohio.
Yeah.
And then you went to college in the East Coast.
Yeah.
And at Brown.
Yes.
And you were the co-captain of the rugby team?
Yes.
And do you still play rugby or not so much?
No, I don't play. I played rugby at Brown, I played rugby at law school, and I played rugby after. It's a great sport. Having never played it till I played it at college, it is, in a way, the most intense. What looks like disorganization out there is extremely organized, but it's unique in that it's physical and tackling. You kick, you run, everybody gets to handle the ball, and you run for 80 minutes. And so it's a very demanding game, and so it was a lot of fun.
Okay, so now you are the chancellor of Brown University, which means the chairman of the board, essentially. Yeah. So how do you have time for that?
Well, I've been on the board for 15 years, and at the end of the day, the chair of a board, Chris Paxson, runs the university, does a spectacular job, and our job is to govern and not.
So after you graduated from Brown, you went to law school at Notre Dame?
Yeah. Yes, sir.
And, okay. And did you play rugby at Notre Dame?
I did.
Okay. Yeah. So then you went to practice law back in Rhode Island, is that right? Why did you move back to Rhode Island? You're from Ohio, you went to Notre Dame and the Midwest. Why did you go back to Rhode Island?
Well, none of the Boston law firms would hire a person from Notre Dame Law School, so I had
Oh, okay.
It's hard to believe, but literally, I was the first lawyer hired by the firm in Rhode Island from Notre Dame, and they did it more because I had the Brown, connection and stuff. But the big law firms in Boston, just even with one of my teammates working there, a fellow named John LeClaire, they couldn't convince him to hire me. So I ended up at a great law firm and had a great short legal career there.
Right. So I'm a big fan of people who are lawyers getting out of law and going into finance. So
I can empathize with you, Dave.
Okay, so you're practicing law, you're minding your own business. I assume you're a good lawyer. What kind of, were you a corporate lawyer, litigator?
Well, this is an interesting thing, Dave. When I came out of law school, when I went to law school, I was going to be a criminal lawyer because it was F. Lee Bailey was the talk of the world at that point, or I was going to be a labor lawyer. And then I went to law school, and I went to a firm, and oddly enough, I went to law school from 81 to 84. There were no corporate lawyers in America because it was before the 80s took off. And after the 70s, the activity died. So being a person that is impatient in life, I said, why don't I be a corporate lawyer? Much to the chagrin of the litigation lawyers and stuff who thought that I'd lost my gourd. So I became a corporate lawyer more by, I could see the opportunity to get responsibility, and I did that for 9 years and became a partner.
So how did you escape from being a corporate lawyer? What did you do?
There was a fellow named one of my mentors is named Terry Murray, who ran Fleet. And I did corporate law, a lot of work I did for Fleet. And then Terry, after we did a transaction called the Bank of New England transaction with KKR, put money into the bank industry, and we bought the Bank of New England, meaning Fleet bought the Bank of New England from the federal government in the early 90s after the real estate crisis. I'd structured that deal in a way that I'd structured private equity deals for our bank private equity firm, which was a thing called dual convertible preferred stock. It convert into parent company stock or bank stock. Never been done in the public array. Terry said to the general counsel, he's too smart to be a lawyer, which I never figured out what the general counsel thought about, who was a brilliant guy. And he said, get him in here and we'll figure out if he's going to do something. So
I went to work at Fleet, which is headquartered in Rhode Island.
I just went to work for Fleet, and I was deputy general counsel for like 3 months, and I went on a special project to re-engineer the company and became the head of strategy.
And then Fleet ultimately merged with Bank Boston. And how did you survive that?
Well, that was the last deal I did. I was the head of M&A and strategy, and Terry Murray and Chad Gifford put together that deal, and Chad took a liking to me. I was acquired.
Chad Gifford, who was the head of Bank Boston.
I was acquired taste for Chad because I was in the middle of negotiating, getting all the cost structure and getting the alignment, and I was meant to be the pain in the butt. And so Chad ultimately took a liking to me, was a great mentor, and said, you got to run a business, and put me in running a business. And we were merging two companies together, and I survived and ran the wealth management business for a few years.
You ran the wealth management business for the combined Bank Boston Fleet.
Yeah.
And then Bank Boston Fleet combined company was sold to Bank of America.
In 2003 fall, yeah.
And so how did you survive that one?
Well, they asked me to run the wealth management business, the combined companies, and I did that. And Ken Lewis wanted to integrate some of the people, because the companies were maybe 60-40, but they're very sizable companies. And so he was trying to get a management team that represented both companies. And so Chad was chair and Ken was CEO, and I went and ran the wealth management business of the combined company.
All right. But then you became the general counsel.
For 40 days.
For how long?
40 days and 40 nights.
All right, so you became the general counsel of the combined Bank of America.
Yeah.
And then?
Well, so what happened was, in December of 2008, we bought Merill in the Lehman weekend and everything, so we were originally trying to buy Lehman. We said we couldn't do it as a company. I was running at that point the corporate investment bank and other parts of Bank of America. We couldn't do that. And then over the weekend, that's when the world became very ugly. And so we bought Merill, and remember Morgan Stanley got investment from the Japanese bank, and investments were made around. And so after that, I'm sort of running the integration, a bunch of stuff as we're going through from October or whatever it was till the fall. And then around the time Merill showed up with a $7 billion loss in the quarter, and with a lot less capital than we're supposed to have, we started telling the government we couldn't do the deal and stuff. And so Ken asked me to be general counsel because we were eliminating a lot of jobs, and I actually eliminated my job. And I was basically out of the company. He said, you know what, stay and become general counsel because we need somebody. And from December 9th to
all right, so you became the general counsel of the combined Bank of America.
As we negotiated with the government to figure out how to get the Merill deal done, and then I went back in business right after.
But then you left after that for a while.
No, I became. So then in mid-January of 2009, I took over a bunch of the businesses after John Thain left and went back into business. And then by the end of 2009, I'm CEO. I had a lot of jobs in a short period of time.
All right, so now...
It wasn't what somebody should do.
Now, you bought Merill Lynch at a discount, I guess, or low price, but it turned out to be a pretty good deal, I guess, right?
From an operating basis, it was always a good deal. The issue was that the hole in their capital cost us some dilution. So, and we worked through that over time. So, with new capital rules and everything, we had about 7.5, 8 billion shares at the time. We went up to almost 12 billion. Now we're down to about 7.4. So we're back down to where we should have been. But it took a lot of work through all. But from an operating base, it was always a home run.
Right, before your bank came back from a rough position, you borrowed, in effect, $5 billion from Warren Buffett. Is that right? More or less?
Yeah.
And it was pretty expensive capital, some people say. So did Warren Buffett get a better deal? Did the Bank of America get a better deal out of that?
Well, our stock was trading at $5. He converted at $7.14 a share. So it was a classic 20%. He had a 6% dividend. We were paying low dividend. But if you bought the common or the preferred had a 10% dividend that day. The common, you would have done better because you would have picked up more the first $2. So you picked up. So 40.
Did you negotiate the deal with Warren Buffett, or is he pretty smart? Or?
It's apocryphal. He's told the story, so it's not my. But the idea came to him in the bathtub. He called up, got into the call center, believe it or not. Right. Then finally got someone to get a number, called me and said, I want to put $5 billion in your bank. And I said, we don't need the capital, Warren. He said, no, you don't. That's why I'm calling you. You need stability, and I can provide stability. And I said, yes, you can. The night before, a fellow named Mike Lyons, who now runs Pfizer, who was working for us at the time, and a fellow named Bruce Thompson and I were sitting there saying, we need to get some stability, because remember, what people think about is government shutdowns and defaults. The government was really in trouble in August of 2011. They couldn't come together in funding. They were starting to overdraft their accounts, let's just call it that. So that was going on, and then we were getting banged around because all the mortgage litigation. And so he came in, put the money in, and from then, from basically a $5 share price up to $44, $45, whatever, it's been pretty unbroken since then. So he's fared well, and we fared well.
Does he still have the stock, or has he sold most of it?
He sold about a third of it. Right. And then, he bought another 300 million shares. He ended up with 1 billion shares. He sold down to like 600 last I know. But he did very well, and we did very well, and he's been a great investor.
Let's talk about the beginning of Bank of America. So Bank of America started as Bank of Italy.
Yeah.
So who started Bank of America, and why did he name it after Italy as opposed to America?
Well, A.P. Giannini, who was Italian descent, started the Bank of Italy when he came to the country in San Francisco to help the Italian community that emigrated to San Francisco. And he became famous in the San Francisco earthquakes and fires in the early 1900s by setting up a barrel and starting to lend money. And then fast forward to 1999, when Nations Bank, which was the North Carolina Bank, which is the bank, the bank today, and the Bank of America merged, you had two good names. Nation Bank wasn't a bad bank name, but Bank of America was a better name. So they took the name, but the operating company that survived was Nations Bank.
So it moved from San Francisco headquarters to a Charlotte headquarters, where you are headquartered now.
Yeah. And it's interesting because with the LA fires, we've asked our teammate Raul and I to step in, because we have a heritage in California helping in times of stress. That we have a big business in California, and Raul's doing a great job. But you do have this historical ways that we've done business around the world. We're the first bank to make a loan in Japan after World War II ended at the request of the U.S. government to start lending money. We've been in the UAE since it was formed. So you go back in heritage. It's just a wonderful heritage. And the Bank of Italy heritage is apocryphal because of Giannini. But the reality is the bank that survived all this and drove all this was the North Carolina Bank, which formed to bring capital to the Southeast as it grew because the New York bankers wouldn't come down and do as much business. That is the bank that survived all this. And so all these rivers came together and formed this huge river.
One of your predecessors as the head of Bank of America became the head of the World Bank at one point. You have any interest in being the head of the World Bank?
No, you've got Ajay coming in. I'll let him run that because I haven't been asked, and he does a great job. He'll be terrific for it.
So let me ask you about this. Banking today, why do we need all these bank facilities, bank
branches,
buildings,
financial centers?
Because everything is done online, it seems. Do you actually have a lot of buildings? Do you really need all those buildings you have where you have your bank?
This is the classic do as I do, not as I say. Because at the end of the day, between this morning when the banks open up to tomorrow morning, 400,000 people come into our branches. So this idea that nobody goes to a bank branch just is not true. The idea that nobody uses cash, well, about $250 million will go out of our ATM machines in the next 24 hours. The idea that nobody writes checks, there are 100 million checks.
How many banks do you have around the country now?
We have 3,700. We went from 6,000 down to 3,730.
And what about ATMs? You have a lot of them?
We have about 14,000 of them. At the high point, we had 18,000. And that's technology. At the end of the day, the huge technology impact in banking over a long period of time, but since the team started in 2010 coming together, really started a few years before that, we have been basically engineering the head count, the facilities. We had 120 million square feet of real estate in 2010. We have about 70 million today.
Hey, now, have you ever gone to get money out of an ATM and been denied?
Not since college during the Great Blizzard of Great Blizzard of '78 when we were at the wrong. We had a friend gave us an ATM card to go out and get some money to buy liquor before everything shut down, and we went to the wrong bank.
What about
give us some money?
What about credit cards? You ever had your credit card denied?
Not that I'm aware of, but
okay. So
hopefully nobody else has that shouldn't have been either.
How has the world of technology affected the banking world? So right now, so-called fintech.
Yeah.
Has fintech dramatically changed the way Bank of America operates?
So we invest about $4 billion in new code every year. Every weekend we'll have a couple million lines of code go in to amend our systems and change our systems or add new technology. That's not to run the systems, that's another $8 or $9 billion. That is just new activity. So the impacts have been unbelievable. But people it's still human beings and what they do and how they do it. So you have to be high touch and high tech. So in the mid-'90s, when I was the head of strategy for the company, I remember consultants coming and saying, 20 years there'll be no bank branches. Well, it's 30 years, and guess what? We still have 3,700. And the reality is people want it all the ways. So, but the impact of the phone, the iPhone in particular, was so different. And we were the first app available on the iPhone. And the reason why is we built our technology through someone's prescience in the company to be a web-based technology back when people didn't do that. It was really an app-based technology. So it could be made an app back. We don't think of these things today, but back then that was an unusual thing to have an app. Everybody went to the websites, et cetera. So that took off. And so from that start, you now have 40 million consumers who bank digitally with us all the time. Last year we had about 90+% of our interactions with consumers are digital. Right. And yet the critical importance of a person going into one of our stores and saying, I got to figure out how to save more money. Can you help me do a financial plan? My mother's sick. I've got a power of attorney. I need you to figure out how I can manage her affairs. My kid wants to go to college. I need to figure out how to borrow the money. All those things are critically important. So you have to be able to do both.
So people still writing checks the way they did 10, 20, 30 years ago? Is that a big business for you, check cashing?
Check cashing is not a business. It's a convenience for the customer. The checks written from like 2019 and now are probably down 30 or 40%. There's still a fair amount of them. What you've seen is the dollar volume written stays flat, right? But the number written comes down. And we track that literally every week, but we track all our spending every week, but we can see what's going on in the American consumer. But in the dynamic there is people are still paying their rent or the mortgage or something like that, car payment with it. What they've done with Zelle, which didn't exist a decade ago and now is the dominant force. Our clients send more money over Zelle than total Venmo is sent, to give you a sense. And so it's become the dominant way. That's replaced a lot of small dollar checks, but the big dollar checks still go through the system.
In the old days, when I used to write a check, the bank eventually would send me back the canceled check. What happened to those canceled checks? Where do you keep them all now?
They're all document destruction policies, but they're all image-based. So even if you went to a branch and deposit a check, it's image-based right then, the actual check's destroyed. It's the idea of taking a check deposit ATM, so about 15% of the bank's checks are deposited at the physical ATM, a lot of small business activity. The other, that's called 85%, about 50% of it goes through mobile, taking a picture of it, which is you imaging the check. The other 30% goes through the ATMs, which the ATM takes a picture of the check. The check disappears in all cases.
So if I want to go to use an ATM and I have a Bank of America ATM card, but I don't see any Bank of America ATMs, I go to some other bank ATM, I pay a fee.
You wouldn't, David, because you're... What? You wouldn't, but other people might.
I thought you had to pay a fee. I mean, is that a profit center for banks, those fees? Or?
No. At the end of the day, we get 55% of our revenue, our $100 billion of revenue last year, 55% came from interest, 45% came from fees. The dominant part of those fees are trading revenue and asset management fees and things like that. We have consumer fees, but they've come down dramatically because basically we said to the consumer is, you keep changing your behavior, we keep driving down the cost to serve, and we'll give that back by lower and lower fee structure. So we have a no-fee checking account. We have a $5 simple checking account that people know that you can't overdraft. We do our overdraft fees when we first started changing our policies 15 years ago were $5 billion a year, and now they're $120 million a year.
So do you think we will have in our collective lifetime no more currency, everything will be digital, or you think that's not likely?
Not in our lifetime.
What about a digital currency, which doesn't preclude other things, but a digital currency?
Well, I think the new administration wants to push, so you have to think about three parts of this dialogue. There's a blockchain question, there's the stable coin type of currency question, and then there's the Bitcoin and other types of things. It's pretty clear there's going to be a stable coin, which is going to be a fully dollar-backed type of thing, which is no different than a money market fund with check access, is no different than a bank account, really. And so if they make that legal, we'll go into that business. So you'll have a Bank of America coin and a U.S. dollar deposit, and we'll be able to move them back and forth because now it hasn't been legal for us to do it, but it's just then like another foreign currency. The question of what it's useful for is going to be interesting.
Right. So in the old days, 10, 20, 30 years ago, if you had a lot of coins, you put them in a jar or your desk, and eventually you could wrap them up and take them to the bank. Now, if you go to the bank, they don't want the coins.
Well,
what do you do with these coins now?
We're going to get rid of the pennies, so maybe. The other day, if you roll them and bring them in, they'll count them up and stuff. But it's a tricky thing because it's just a lot of work for.
Okay. So now President Trump said we're not going to make the penny anymore.
We'll take all your coins. Don't worry.
Okay. The penny. What about the penny? We're not making the penny. Is that a problem?
I think the economics that they're talking about is it costs more to distribute them. Look, the other day, when you think about the bills, the currency, whether it's coin or bills, and it's mostly bills in terms of value. It's an interesting thing. So 98% of all the bills that move around the world, we move on a day as a service to the government. Right. And there's nothing bigger than 100. So $1 billion of hundreds weighs a few tons. $1 million of hundreds is a 25-foot stack. So there's a big physical part of this. Now, the reality is that's done for reserve currency and central banks. That's who holds it. The rest of the money all moves digitally today. So we'll move $3 trillion today digitally. So the idea, and our consumers' money movement is dominated digitally, whether it's a Zelle payment, a wire, an ACH. At the end of the day, that doesn't include credit and debit cards, which would take another big part because at the end of the day, what's a debit card? It's just an introduction to digital. So getting rid of pennies and stuff, there's economic support, but the reality is we'll always have currency because that represents.
And what's the most common currency? Is it a $100 bill or the $1 bill?
I don't know that, but I'm sure there's more ones than hundreds. But at the end of the day, all the big, the real money movement to the central banks is all the hundreds. It's palleted to hundreds. It's a wild scene to watch. These pallets go through this. We go to the Federal Reserve, we pick up these pallets of cash and send them around to the central bank of France to have their reserves.
Well, when you need cash, do you go to the bank and get cash at the end of the week, or do you just go to the ATM, or you don't use cash so much?
I do everything every one of our clients does. Look, at the end of the day, I often go and say hi to the teammates because that's kind of fun. So I try. If the bank's open, I'll go and say hello and get some money out. But at the end of the day, like you, like me, like everybody, you become. If you look at the way the money, so year to date, about 7% more money got moved by Bank of America consumers over last year, so that's pretty healthy. If you look, 25% went by credit card payments, and about 14% went by checks and Zelle and other stuff. Cash was probably in the high single digits. So it's not a lot of cash goes out of the ATMs every day when you put it against these other payments. So $4.5 trillion will go out in cash. How the ATM today is a couple $100 million, and that's going on an economy being spent. So the healthy consumer spends money, and that's good, but they use all the devices. Cash is becoming less, but it's still critically important. And so that's why we have ATMs, and that's why we have branches, and that's small businesses receive cash especially and bring in and deposit, and that's why you need a physical plan.
So if I go to your bank and I want to make a deposit of $10,000 in cash, I'm going to get reported to the federal government.
Yes.
And 10,000 isn't what it used to be.
So. Well, so one of the reforms we're saying is, and somebody testified a few weeks ago to this fact, so I'm paraphrasing their story, is they said when 1972 they set the $10,000 level. The theory even goes back to the 40s, but let's just say 1972. In 1972, you could buy a fully loaded Cadillac for $10,000. We're now this many years later, and we still report not only if you did 10,000, but if you did 3 or 4 transactions in a period of time that looked like you were trying to evade the 10,000, we'd have to report that too. One of the simple answers we're saying, just index that to where it should be, which would be like 100,000. When you do that, that takes out all this activity and moves it away. And $100,000 is the inflation-adjusted amount from 50 years ago for 10, or maybe 78 or 80,000. And so if you're saying lift that amount, you'll take the average transactor completely off the table, and you really will be looking for people who are trying to move significant amounts of money or avoid the transaction level. It's such a simple fix, and I think people can see that. And by the way, in 20 or 22, there was an act passed that became law that gave the authority to Treasury to do that. They just need to do it now.
Right. So now you live in the Boston area, as you have for many, many years. The biggest headquarters office I think you have, or financial center office, is in New York, and your headquarters is in Charlotte. Yeah. So is that inconvenient for you to go all these different places?
No, it's not, because we also travel all over. Like, I'm here today, I'll be in Florida for a couple of days, and et cetera. So we move all over as executives in big companies, and you do too. But the idea of moving people around and moving their, where they work and moving their families, it's more difficult than 20 years ago when we said we're moving the headquarters to Boston 30 years ago. You just got up and moved. Right. It was not a question that you said, oh, maybe I got a better idea. So as we look across that, we have 16,000 plus people in Charlotte. We have about the same amount when you take New York and the areas around New York. But we also have 5,000 people in Boston. Around there we have 35,000 to 40,000 people in the state of California. We have 30,000 people in Texas. So Florida, we have operation centers in Jacksonville. So you have people everywhere. And the idea is we try to always look at it and level load activity around the country to avoid, to use time zone differences to our advantage for call centers and to access talent pools. And then remember, all our branches and our private banking teammates, our Merill teammates, and our business lending teammates across all the businesses, they're all in the field. They're in 9,700 markets out there every day.
So if I wanted to make an investment in a bank stock, would you say it's a good idea to invest in bank stocks now, or you think bank stocks may be overvalued, or what do you think?
Our valuation difference to the S&P is lower than it's been, and I think our company is a great value, and the rest of the banks are pretty good value.
Okay, so now, when you took over the bank, you had more employees than you have today. Yeah. The bank has expanded. Why do you have fewer employees? Because your bank's so much bigger.
So that's technology, and that's applied technology. So in 2010, we opened with 284,000 employees. We went up to 305,000 to peak, and we ran as low as 204,000. Now we're about 213,000. And so all that was done with applied technology and digitization, new technologies, both. So if you think about work, the way to get rid of work is to eliminate and re-engineer the work and eliminate steps and things like that. You can do that through automation. You can do that through just not doing them, et cetera. Avoid duplication. Then you can eliminate management of work, because if you have less people, you need less managers. And then you eliminate the real estate that people sit in. And so we've been doing that on and on again. But the key to make it really move was technology. Right. And so whereas we had, in 2010, we would have had 5,500 branches. We now have 3,700 branches. We actually have probably almost 1,000 of those in places we did not have branches back then, in different cities. And so if you think about maybe 600 or 700 like that, so you think about that, those branches are bigger and more efficient, but all the transactions that come out, right, and what's in there is sales activity and relationship activity. And so it's just that constant re-engineering. We have a thing called OpEx. Every year we come up with thousands of ideas to take out and re-engineer the company. And so at the end of the day, more customers, more activity, more people, and yet you've driven the head count down, and our costs are 2/3 people. And then basically the other third is some advertising, the buildings, and technology and electricity.
Now, there's an acronym today that some people in Washington don't like called DEI.
Yeah.
Do you have a DEI policy or not anymore?
We have diversity inclusion in our company, but let's step back. What we've always been is a bank of opportunity. So we think about creating an opportunity for our teammates. And how do we do that? We go out and hire from all areas and bring people into our company. So we go to 400 different schools to recruit kids. We have a program we call Pathways. So Pathways we announced in 2018. We said we'd hire 10,000 people from low and moderate income neighborhoods to come work in our company. We completed the first 10,000. Then we went out and said we'll do another 10,000. We're up to 30,000 people over the last decade almost that we've hired from LMI communities to come work for our company, from high school, junior college, and colleges to come work. So once we have a very diverse company in terms of representation from all economic stratas, all races, all ethnicities, once they get in, the opportunity is there for a lifetime. We equal pay for equal work, the ability to promote, we train, we do all the work. And so the idea is that's an opportunity. When we look outside our company, we try to work with other employers to create the same opportunity we create. We try to work with nonprofits and communities to create opportunity for them to be successful. And so the idea is just create opportunity. So we have a diverse team. We stress inclusion. So when you're at our company, you can be who you want to be and be successful, including we have 300,000 memberships in our employee resource groups, of which about 60% of the people are in one. The average S&P 500 company has 5% employees. Our employees love to work together. They're open to all, even though a cohort. And so we just try to create opportunity.
So a young person is graduating college. Why should they go into the banking profession as opposed to private equity, investment banking, healthcare? What's the appeal of working in a bank?
Well, when we bring the 2,000 kids in and I talk to them, I always say the same thing. You can make a lot of money doing a lot of things. You can have a great career doing a lot of things. But if you're going to come to our company, you really want to help people. You want to provide the answer. Our market position is, what would you like the power to do? And I said, your job at this company is to help people answer that question, whether it's a customer, whether it's a teammate, whether it's a shareholder, whether it's a community. And you got to come and want to do that. You want to deliver a lot of profits done the right way with a purpose around it. And if that's what makes the place special, and our turnover rate's an all-time low, and we are sought after by young kids to work. So you hear everybody's going to tech companies and stuff. We have hundreds of thousands of applications for the 3,000 we hire.
Your Bank of America is mostly focused in America, I assume, but do you have a lot of business outside, and do you want more business outside of the United States?
Yeah, we do business in 130 countries. We're in 30, 40 core countries. We've been in, like I said, in Japan for 80 years now, in India for 65 years, and Brazil since 1954, and Argentina since 1914. So we have an international business, and the amount of loans we have outside the United States for commercial customers exceeds what we have in the United States for large corporate customers. So we're a global business for global investors, global firms, private equity firms, global investors, global companies. And so we do investment banking, corporate banking, treasury, cash management, and trading across the world. And we're top 2 or 3 in the world in these businesses, going back to your earlier point, that the U.S. companies that come to dominate those businesses are more right at the top.
Were you ever at a cocktail party or a lunch and somebody gives you a resume? Does that ever happen to you, if somebody they think should be hired by the bank?
There's this thing called email that gets them there faster nowadays.
All right. And now, on the personal side, you've been there 15 years. You haven't announced any time when you might step back, and you're not prepared to announce that today, right?
No, I don't.
Okay. So
I'll tell you first, though, David.
Okay. So have you been able to convince your children to go in the banking world?
My oldest son's an investment banker for a different firm, obviously, and my middle child is a risk manager for another firm in financial services, and my younger's in communications and stuff. I never said, look, being a CEO's child is not the easiest thing, being a CEO's spouse. So they saw me work in different ways across the years, and so it's their decision what their career is, and it's nice. My son, he's a deal doer. He's an M&A type of guy, so it's fun because I used to do that. I haven't done that in a long time.
What do you do for rest and relaxation, all your spare time?
I do what everybody else does.
You're not a rugby player anymore, right?
I ski, play a little golf, try to work out, spend time with the family, probably watch movies and go out to eat, and probably read books that are a lot of historical novels and stuff.
So you've turned around.
And your books too. Right?
The bank has turned around. Did you ever think the bank wasn't going to make it during the financial crisis? Did you think the bank could go under, and other banks as well?
During the financial crisis, interesting enough, during the financial crisis, during the 2008 fall, which into 09, which was really when the crisis was felt by the world at large. It really started in 2006 when real estate prices started going down. And that started a series of activities, just took a while to get to everybody. Our company was in great shape and was earning a lot of money. We made a couple acquisitions which caused some damage, one of which was completely not understandable, but there's a lot of lessons learned, which was Countrywide and getting too big in the mortgage business. And so we have changed our position in the mortgage business dramatically, because what happened was when delinquency shot up in mortgages, we had 1 in 5 delinquent mortgages in the United States, Bank of America was servicing. Right. That's a lot of work, and not a lot of people are saying, I want to be your client because you're calling up trying to collect my mortgage. And so we repositioned it. And so oddly enough, during the core of the financial crisis, it was not an issue. As you moved into the mortgage issues became bigger, we always knew we'd be fine. We always knew we had capital. We were building capital, earning money. We took a $20 billion charge in the quarter and still made money that year, to give you a sense. So we always had this underlying core earnings power. We just had to get the crap out of the way and let it come through.
Now, the World Soccer Federation is having I guess their World Championships are going to be in the United States, and you're a sponsor. Are you a soccer player yourself, or?
Like most of the people here, I wasn't, but my kids were. But the reality is we have an approach that we try to take things and bring them across America through our 97 market presidents, Larry DeRita being the market president here in Washington, and Jana Curry in Baltimore is here too. But and we try to bring those locally. So in the arts, we had this thing called Museums on Us that Ann Finucane started a number of years ago and did a great job, where we democratize access to museums. 275 museums around the world. You show them Bank of America card, credit card, debit card, you're in for free. The museums loved it, we loved it. So we tried to do that. Then with soccer, the pitch we made to FIFA is we'll be a sponsor like everybody else, and there's a value to that. But there's a club championship this year, and there's the regular country championship next year. And with Gianni and others, we said, look, we can help you bring this across all these markets. So the 16 or 17 markets that the games are held, those are big, events, and it's a 40-day tournament or whatever. It'll be great for American soccer spirit. And then we also are sponsoring the USA Soccer to help them build a new facility down in Atlanta, a training facility, and also have all the different, the men's team, the women's team, and everything. And so our view is soccer is a great sport. Sport brings people together. It's destination watching. But importantly, we're trying to bring these things into local markets. So working with people to help build fields in those markets to do these things that FIFA can do. And FIFA's got to get, in their mind, they've got to get the American public to endorse, view, and consume soccer, because that's the big revenue stream that's not in the world.
So a final question for you. Let's suppose I just graduated from college and I want to open a bank account and get a credit card. Why should I do it with Bank of America versus JP Morgan or Wells Fargo?
We're just better.
Okay. All right. I want to thank you very much for a great conversation.
David Rubenstein and Mr. Moynihan of Boston and Brown University there. I thought it was great just to see the, not your life, but the history that goes into, Paul, as you and I know, we lived it, the roll-up from
absolutely.
Everything from Bank of New England to 7 other banks.
Yep, same thing at Wachovia. Wells Fargo, they have a similar story of roll-ups. A lot of the banks, the New England banks, the North Carolina banks, the Virginia banks, and so interesting. So, and a wide-ranging interview. So David Rubenstein touched on a whole host of corporate and personal matters.
I was expecting Moynihan to turn it around and start interviewing Mr. Rubenstein about the Baltimore Orioles.
Exactly.
Tigers, Orioles this afternoon. Jackson Jobe against Charlie Morton.
Okay.
Every time I watch Charlie Morton of the Atlanta Braves, now with the Baltimore Orioles, it's a joy. Okay. It's like old school.
Yep.
So that's a great spring training. I'm surprised Rubenstein didn't sell that today. From the Economic Club of D.C. And thank you for your interest. Out on YouTube, huge interest to that interview of Mr. Moynihan and Mr. Rubenstein. Markets are open for all of 3 minutes. Let's get a brief. Here's Lisa Mateo.
You got it. We have stocks mix right now. The Dow leading the gains up 0.6%, 267 points at 43,727. Then we have the Nasdaq leading the losses, down 0.3%, 64 points, and the S&P 500 up 0.1%, or 5 points. We have the 2-year yield 4.10%. That's down 6 basis points. The yield on the 10-year 4.31%. That's down about 8 basis points. The Bloomberg Dollar Spot Index down about 0.1%, and we have Bitcoin right now below 90,000. More economic data. Home prices, well, the gains, they heated up in December. A national gauge of prices, they rose 3.9% from a year earlier. A few companies making news. Eli Lilly cutting the price of its Zepbound vials by about $50. The company's trying to fight off those cheaper copycat versions of its weight loss drug. Then you have NVIDIA extending a partnership with networking gear maker Cisco Systems. The hopes is that it's going to make it easier for corporations to deploy AI systems. NVIDIA shares down about 1%. And sources say Apple, Indonesia, agreed to terms including an investment of $1 billion to lift the country's ban on iPhone 16s. Apple shares up 0.3%. And this futures report was sponsored by IBKR. Will the U.S. average temperature in February 2025 exceed 36 degrees Fahrenheit? At IBKR forecast trader, the yes recently at 44%. What's your take? You can trade your prediction at ibkr.com/forecast. Paul and Tom.
Lisa, thanks so much. Paul Sweeney and Tom Keene, thank you for your commute across the nation. Good morning out on the West Coast on Apple CarPlay, Android Auto. On YouTube, subscribe to Bloomberg Podcast. It is our new digital experience. Humbled by that. The first time I ran into Barry Ritholtz was in some, hotel bar in New York. It was a bar.
There you go.
No, I was
taking a guess.
They said, let's go see this guy. And he's doing an investors conference. And there's 100, 150 raptured people in the audience. He's up on stage. And I'm usually like, yeah, whatever. Except what came out of his mouth was shockingly commonsensical. He's gone on to fame and glory. The movie rights have been sold. We're getting out front of a March release to a really important book, How Not to Invest. I'm not going to go to the math now, but I'm really big on type 1, type 2 construct. And the entire industry, if you open up any Saturday investment rag, whatever, is based on a massive type 1 positive construct. This is the mother of all type 2 construct books. What Not to Do. We celebrate Barry Ritholtz, which I think, 400 plus pages. Have you read it yet, Paul?
Oh, it's on the shelf, ready to go.
One of his handlers said to me, the cliff notes will be very important. Okay. Page 235, a wise one. You hit a triple on Apple and you got out. And it was, you say, the worst trade you've ever made.
My worst trade. And actually, the first time I told that story was you asked about Apple. I've been a Mac head for a long time. I was invited to check out the newfangled iPod. Let me emphasize, that's pod, not phone. And it was pretty obvious. This is the new Sony Walkman. Yeah. That's how old I am. And at the time, Apple was $15 with 13 cash. So you were risking $2. I recommended it to the firm. Everybody in the office bought, tons and tons of shares. I was really excited. At 15, at 20, I get the daily reports from the firm. Why are you guys selling this? And it's like, hey, we're up 33%. It's a giant winner. Take the W and move on. Right. And I'm like, I'll show those guys. And I held on to it till it was a triple. Just kept moving my stop loss off, up and up. Right. Eventually, the volatility of the stock got out. But the crazy thing is that was about 27 cents when you adjust it for the past three splits. I was thinking like the trader I once was and not the long-term investor I had become. And it was an important lesson. I left a couple of $1 million on the table.
Right now, people after last year have triples on the book. We got all this news flow, geopolitics, blah, blah, blah. How do you hold now instead of go to cash?
Well, first, history tells us people who go to cash, they pay a ton of taxes. They're terrible at getting back in on a timely basis. This is an opinion. The academic evidence is just overwhelming. That's number one. But number two, and perhaps more importantly, is why are you even investing in the market? And usually the answer is because I have some future liability or obligation I want to cover. Maybe it's paying for college, a down payment on a house, retirement, philanthropy, generational wealth transfer, whatever. So if you're investing towards a goal, what happens this week, this month, even this year isn't relevant. You have to think of, hey, I'm retiring in 2040 or 2035. I don't really care about a random Tuesday. I have to rise above the noise and focus on the long term. Now, that's if you're a broad asset investor. If you're holding a few $1 million worth of Bitcoin or NVIDIA or what have you, the stories about single company stock risk are legendary. And it doesn't have to be a zero like Lehman Brothers or Enron. It could just be a company whose time has passed, like General Electric. There's a chapter in the book that talks about GE's incredibly generous 401k plan that if you bought GE stock, they would essentially subsidize half of your purchase, which is great, except your income and your retirement are now tied to the same thing. And GE lost about $500 billion in market cap a decade ago. If you needed that money then, you were in trouble.
How Not to Invest is the title of the book. What are some of the not to do's out there that you see?
So I love the Charlie Ellis framework of comparing investing to tennis. And, less than 1% of tennis players are professionals, and they win by scoring points. They hit aces, they hit with power, they kiss the line, they do fancy drop shots. Most amateurs, the remaining 99% of us who haunt tennis courts, we basically lose by unforced errors. And throughout the book, the focus is what unforced errors do you make? Some are pretty obvious. Not paying attention to taxes, costs, overtrading, thinking you can market time. Imagine you can. Now, I'm going to tell you that the parallels between sports and investing are very similar. For every LeBron James, there's a Ken Griffin that can market time. Most of us are neither LeBron James or Ken Griffin.
Barry Riddle's with us, and of course, folding into his podcast. What's Masters of Business?
Oh, yeah.
Yes. Oh, sure. Charlie Ellis this week was tremendous, Ellis. Fantastic.
So you got those names here. So the difference in this book, folks, and he doesn't need me to sell the book. I said, do you want me to do a blurb? He said, I don't want you on the back of my book. I want the Nobel Prize winner, Richard Thaler, and a guy named Cass Sunstein. Rebecca Patterson's on the back of the book. What is that about?
You're inside the book.
I'm inside the book.
You are actually inside the book. So in my list of all-star, I think you're going to do a cameo playing yourself.
Okay, very good.
I don't think we could get someone.
This is what it's about. Page 252. It's Will Danoff of Fidelity, Contrafund.
Thank you,
and on the
Danoff.
next page is a guy named Howard Marks. And the difference is the author's actually spoken to these people. And has an understanding. What's the distinction of Will Danoff at Contrafund up at Fidelity?
It's amazing because when you, again, back to the academic data that shows over 10-year periods, the vast majority, 19 out of 20 mutual fund managers don't beat their benchmark net of fees, and that's why indexing has become so popular. But when you find a Howard Marks or a Will Danoff or a Peter Lynch, everybody knows their names, certainly within our industry, and Peter Lynch has become, like Warren Buffett, a household name. They're the exceptions that prove the rule. It would be impossible to put money with Will Danoff when he first started 30 years ago. Why would you give money to this kid that's telling you that he's going to pick, there was some people that had money with them, not just Paul, but a handful of people. We find out about these people after the fact. So it's not exactly helpful to say, hey, you should have put money with Will Danoff 40 years ago, would have been, or Warren Buffett in the 1970s. The problem is it's so hard to pick those people in advance.
Let's get 2 more questions in here. Paul, jump in.
So, Barry, for the next 5 to 10 years, what do you think is going to be a major determinant of just returns for investors? Is it AI? Is it geopolitics? What do you think the next 5 to 10 years are going to be a determining factor?
It's the same thing that it is every single cycle, every single year. It's a combination of profits and psychology. What you pay for that dollar of earnings is a function of how profitable a company is at any given moment, how profitable a broad sector is. But people forget most of the returns in bull markets don't come from gains and profits. They come from increases in multiple expansion. Look at 1982 to 2000. The Dow and the S&P are up about 1,000%. 75% of that is multiple expansion. You start at a PE of 7, you finish at a PE of 32. Sure, profits went up, but not nearly as much as the psychology of we like this economy, we like this market, we like this corporate environment. We're going to keep buying because we think this is going to go higher. And part of the reason you end up with these decade-long bear markets, 66 to 82, 2000 to 2013, is the tail end of the bull market just pulls forward so much profit appreciation, price appreciation, that it takes a few years to work those excesses off.
Let's go to the industry crutch here. This is our final question to Mr. Ritholtz. We'll have him in here. I think it's on an every other day basis as he flogs this book as well. There is always a recession coming.
Sure.
That's the drug of the media business, isn't it?
You know, there was a Wall Street Journal article. By the way, I single out a lot of different media outlets. And I always tell people, don't read mastheads, read your favorite writers, because you can go anywhere and pick the worst person or the best person, not necessarily representative. And so the Wall Street Journal did a survey of economists, and 80% chance of a recession in 4 years. And if you just look at that, it makes you a little nervous until you stop and think, well, how many recessions have we had over the past 100 years? It was around 21. That's a recession every 4.85 years. Telling me there's an 80% chance of a recession in 4 years is telling me something that is mathematically accurate and completely meaningless. There's always an 80% chance of recession over the next 4 years. It's a chance it'll be cold in the winter and warm in the summer. Thanks, but how do I act on that as an investor? And the answer is you ignore it.
Barry, thank you. And this will be a lot of fun into the spring. How not to invest, and the operative word there on YouTube is not, N-O-T. I can't say enough about the oddity of this book and the immediate value by saying this is what not to do in investment. Barry Ritholtz, look for the movie Memorial Day 2026. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. A midnight deadline has come and gone for federal workers to respond to a threatening email from Elon Musk. Now it appears they are getting another chance. Bloomberg's John Tucker has more.
Musk says that federal workers will be given a second opportunity to respond to the government-wide email detailing what they did last week, and once again threaten to fire any employee who doesn't meet his demands. But there's still a lot of confusion over what to do. The Office of Personnel Management says many federal employees are exempt. In the Oval Office, President Trump called Musk's initiative ingenious.
We have people that don't show up to work, and nobody even knows if they work for the government.
The Departments of Defense, State, and Homeland Security have all granted exemptions, as has the director of the FBI. Musk's efforts have drawn protests from employee unions, Democrats in Congress, and even constituents in Republican districts. I'm John Tucker, Bloomberg Radio.
Thank you, John. President Trump welcomed French President Emmanuel Macron to the White House for a discussion on how the U.S., France, and other world leaders could bring the Russia-Ukraine war to an end.
The deal's being worked on, and we're, I think, getting very close to getting an agreement where we get our money back over a period of time. But it also gives us something where I think it's very beneficial to their economy.
Meanwhile, the U.S. broke with allies and voted against a European-backed resolution in the UN General Assembly that calls out Russia's full-scale invasion of Ukraine exactly 3 years ago. The Food and Drug Administration is investigating a possible link between frozen supplemental shakes and a deadly years-long listeria outbreak. The now recalled shakes under the brands Lions Ready Care and Cisco Imperial are typically sold to hospitals and nursing homes. That's where nearly all the cases have been reported. At least 12 people have died from illnesses associated with the outbreak. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Welcome all of you late in the commute here on a Tuesday. Tuesday again?
Yeah, that's where we are. I know.
PCE's on Friday, right?
We got to make it to Friday.
I'm so disorganized. It's the warm weather.
It is.
That's what it is. Good morning across the nation. Particularly good morning to 99.1 FM in Washington, David Rubenstein with Brian Moynihan, and a wonderful good morning to 92.9 FM, particularly for those of you that survived the St. Patrick's Day celebration at the Bank of New England a few years ago. When Moynihan took out the Bank of New England, they stopped the St. Patrick's Day celebration. Joining us now, and this is really important, Calvin C. joins us right now with BNP Paribas. The BNP Paribas heritage is a carefully constructed, cautious view on the economy, back to Julia Coronado, back at least 15 years or so. In the sum total of your work there, do you see a dampening of GDP off of all the events going on right now?
Thanks so much for having me, Tom. This is the question that every client is asking us. We're getting so many different policies from President Trump. The aggregate of these policies, when we think about immigration policy, especially trade policy, should, we think, begin to slow growth down in the second half of the year. But even more importantly than that, where we're very out of consensus, is that we think that these policies are going to be generating significant amounts of inflation. So despite that slower growth in the second half of the year, it may be a tough spot for the Fed. And the Fed, we think, will keep rates on hold for all of this year.
We haven't done this recently. I mean, this is a whole new world after all. Is what you just laid out good for business? Is it good for Brian Moynihan at Bank of America?
We think that this is a really interesting environment in that Trump 1.0 differed from Trump 2.0 in one really major way. And that is, Trump 1.0 was very combative with the Fed, trying to get the Fed to lower rates at every single point that they could. This time, the administration is really focusing on trying to control the part of the yield curve that they can exert more control over, the back end of the curve. And with that, we think that we should be seeing lower 10-year yields relative to 2-year yields this year, which should be good for the everyday American, as that's the part of the U.S. yield curve where most people are borrowing at.
Did you just say inverted yield curve?
I know somebody who talks about inverted yield curve.
Holy mackerel.
Cam Harvey down at Duke.
Yeah.
So what you were talking about in the economy, slowing growth, higher inflation, that's stagflation? Is that what the economists call stagflation?
We're not necessarily going to call it stagflation, but we could call it slowflation. We think that growth will slow to slightly below trend later this year. We're not going to see a recession, we don't think.
Okay.
But we think mostly it's going to be the inflation side. We are very out of consensus on inflation, and we think that tariffs are going to generate significantly more inflation than people think, and that we think is going to put the Fed in a pretty tough bind.
That's not a good political move, from what I remember. So what does that mean for this Federal Reserve? Should we pay attention to what these folks are doing?
So we, BNP Paribas, were very early and very out of consensus in the beginning of December when we had a no Fed cut view for all of 2025.
Interesting.
I'll take it a step further from there. And I'll say most of our competitors, I think that the asymmetry is still toward cuts. In other words, it's more likely to see cuts this year than hikes. Our view is different, where we think because of these inflationary pressures that are to come, we think that there's probably an equal chance that the next move from the Fed could be a cut or even a hike.
Well, frame out your GDP call into your, the remit that you have there, which is in, basic strategy of the Americas and the larger, bigger picture. Are we sub 2% real GDP at some point out this year?
That's a great question, Tom. We think that 2025 is going to be a tale of two halves. The first half of the year should be above 2% growth. And this is largely because of animal spirits that have come out after the election, strong momentum. But the second half of the year, we do think that growth is going to slow down.
Labor Day and the world's falling apart. This is really important with your heritage. Do you have a belief that Washington, and particularly the administration, will adapt and adjust to a sub 2% statistic somewhere where the Red Sox decide if it's playoff baseball?
Our clients are asking us these exact same questions. We think that the administration really does not believe that their policies are going to weigh on growth. So we think that Trump, if we think about what he really campaigned on, it was really two major issues, and that is to be hard on trade and it's to be hard on the border. Both of these are going to weigh on growth. We think that President Trump is going to push very hard on them, and if our forecasts come true and growth does weaken, then perhaps at that point, the administration could pull back. But we think that they're certainly going to deliver first and maybe pull back later.
So as a macro strategy for the Americas, what are you telling your clients where to allocate capital these days, given that background?
This is a conversation we have every single day. And to us, what we think is one of the more attractive investments for clients right now is to own long-term bonds in the United States. And the reason I say that is because, very interestingly, something that we've been writing about quite a lot is this theme that's emerging where we think that we're now seeing a more bond vigilant administration, which is now thwarting off the bond vigilantes. And that's really evidenced over the last few weeks by Treasury Secretary Bessent, who's basically telling you he's in no rush to increase supply in the United States. And this is opening a window of opportunity, we think, to invest in long-term bonds in the United States.
Cut to the chase. Are you loading the boat in the 10-year right now?
We like the 10-year, but we like it even better in inflation-protected form. As mentioned before, we're very worried about inflation, so we like tips.
Yeah, Paul and I don't care. The reason we had you here is Alex Steele said, can you find someone who can figure out hotel rooms in Paris? You run BNP Paribas. How do we get a hotel room somewhere in the vicinity of, the first arrondissement in Paris? It's impossible.
For us, from a macro perspective, what we're certainly going to see this year with a very strong dollar, which is what we're forecasting, is more tourism from the United States towards the rest of the world. That, all else equal, unfortunately for you, Tom, is probably going to be putting upward prices on a lot of hotel rooms.
It's outrageous. I mean, I was there a couple months ago. Long story short, I have an offspring there. And I was literally foaming over what has doubled in price. I mean, it's a boom economy. Macron's with Trump. Me and an Airbnb.
Yes,
figure that one out.
Yeah.
Macron and Trump are sitting there. Does anybody have a clue the boom economy of Paris?
When we speak to clients, what clients are really concerned about right now are really, I think largely, as you say, what's going to happen with inflation. And this is what you're feeling every single day. Inflation affects all of us.
Right.
And that's why we've been quite concerned. What we're worried about is that inflation expectations today are less stable than they've been at any point over the last 40 years.
Yeah.
Exactly as you're saying. You can feel it everywhere. And with inflation expectations less anchored than they used to be, what we think is going to happen is that as big tariffs occur, this is likely going to result in more second-round impacts on inflation, continuing to push inflation higher, which is why we think the Fed's going to be more hawkish than people expect.
That's how you get out of NYU, is you start talking second order, second round.
That's exactly.
That's how you impress professors. Calvin, thank you so much. Calvin C. with us with BNP Paribas. Brilliant. Are you based in New York?
I am now, yeah.
You are now? Okay. Yeah, he was on the Air France shuttle and that ended. Okay. Calvin, thank you so much. Don't be a stranger. With BNP Paribas, head of macro strategy Americas. Joining us now, the economist Alex Steele, as we get ready for the 10 o'clock hour. Alex, Mike McGlone out with a memo today modeling out sub-whatever oil. I got $70.15. Where, if oil comes down within all your expertise, where does it begin to hurt the oil industry?
Between 50 and 60. I mean, they're all going to say that they modeled for less and everyone's going to be fine. But in reality, between 50 and 60. And remember, too, Bloomberg NEF had a really cool note out that if steel tariffs go into effect, it's going to cost more to build stuff. And that's going to bite also for the oil guys.
Justin Wolfers has a brilliant bar chart out on that where the benefit of tariffs is teens weens and everybody else, witness what you're talking about, gets hammered there.
Like if I'm going to build a well, I'm going to need steel, and that's gonna hurt. The actual tariffs on heavy oil isn't going to really do that much for oil producers.
What's the cost of production for in the United States to get stuff out of the ground?
I'm going to say between 50 and 60. It depends literally on the region and the well. We're talking all-in cost. You're definitely going to find places in the Permian that are going to be in the 30s. But if you're an oil producer, I mean, if you're a mom and pop, that's one thing. But if you're an oil producer with lots of areas, like you're going to need that 50, 60. Maybe a little less if you're a pure play Permian, maybe.
All right, well, I got oil at 70.
Yeah, there you go. Do you really not do Airbnb? Is this really a thing? Does Tom not do this?
No.
Really?
I don't.
Why?
Is
it because no one makes your bed?
Seasons
okay, it's like a different level. Well, that's why your costs are increasing. But there was a fun note out. Did you guys see this? This is really for Paul. That if we do get tariffs on oil imports, it's going to cost you guys more at the pump. Average retail gasoline prices could increase by 7 cents. Paul's not going to like that in Jersey.
I got to get the surveillance.
I
got to get the surveillance goggles out here to look at the number on the Bloomberg Launchpad. BitDog's down $7,000.
I know.
Do you lead with that in the next hour?
We could.
The Alex Steele hour?
$87,000. I mean, risk off there in a big way, and maybe just some volatility is just incredible in that asset class, but it feels like a risk off move there in crypto.
Yeah, and then look at bond market, right? Talk about risk off.
Yeah.
I mean, we're getting consumer confidence coming out at 10. That's going to be super interesting, talking about confidence.
We'll cover that for you.
Okay, very good. Alex Steele and Paul Sweeney driving the conversation forward. Stay with them on YouTube, in your home, in your office. YouTube, the new way to communicate with all we're doing on economics, finance, and investment. Dollar pretty much flattish. Again, thank you to David Rubenstein. Really interesting conversation with Mr. Moynihan, Bank of America. I started out looking, I was thinking music, Santana. We got a huge splash yesterday. And, you do Santana. Well, he did some things. He did a thing with Nickelback.
Did he?
No, Santana. Michelle Branch, The Game of Love. Good morning.